Good morning, Marius. So, in yesterday's class, we were discussing about what happens in the rates of taxes. Yes, I told you to read and come the rates of taxes also. We have kind of completed the whole topic where we started with what are the rates of taxes for an individual in all those cases, rebates, surcharges, what happens in case of an enhanced surcharge, how do you compute an enhanced surcharge concept, some illustrations given to you. Then we did what happens in a firm, what happens in a company, and then cooperative society. Health and education says margin relief in case you are having surcharges. Please understand, margin relief is applicable for every person. Okay, it doesn't matter whether you are a firm, individual, a company, AOP, BOI, doesn't matter. As long as your income is next to a very close slab where the surcharge is changing, in that case margin relief will be applicable to you regardless of what person you are. Okay, rebate is the only scenario which is eligible for resident individuals. Other than that, no one else can claim rebates. This is what the idea was. And then we did special rates of taxes where we started with casual income, winnings, income from carbon credits, unexplained income, patents, royalties, VDAs, and last we ended with capital gains. Where I discussed about the enhanced surcharge concept to you. Yes, this is what we completed yesterday's discussion with. Moving on to chapter number 2. Completing chapter number 2 and moving on to chapter number 3. Can we start chapter number 3 now? Yep. All right. Moving on to this next chapter called as special tax regime. We have already done this chapter kind of. Okay, in chapter number 2, we have already done this chapter, but small things here and there which are pending is what we are going to discuss in today's class. Yes, when I discuss special tax regime, I told you there are almost about 5 new regimes. There are almost about 5 new regimes. What are those 5 new regimes, Rahul? We started with 115 BAA. Then we did 115 BAB. Then we did 115 BAC, then 115 BAD and 115 BAE. Okay, in which I told you 115 BAE is your amendment for the current year. Okay, so 115 BAE is going to be your amendment for the current year, so this has to be kept in mind. Balance everything was there already from the last. Now, how does these things work? Basically, in 115 BAA and BAB, you are going to talk about companies. Who are you talking about? You're talking about companies. Yes, BAC was talking about other persons like individual, HUF, AOP, BOI and AJP. Okay, BAD and BAE is going to talk about cooperative society. BAD and BAE is going to talk about cooperative society. Now, just to give you an insight, 115 BAA, BAB is for companies, BSD and BAE is for cooperative society. Provisions are actually copy-paste. What you see in BAA and BAB, appadiye copy-paste will happen for BAD and BAE, which means BAA is for BAD, BAB is for BAE. That's all is the difference. Section number motto maari irukanga. Some provisions here and there will change, but other than that, almost everything is the same. So if we complete BAA and BAB, we automatically would have done BAD and BAE also, except for small one or two things. This is what the idea is. Yes or no? Yes. One second. I think my screen is not visible to you anymore, right? Okay, 1 second. Okay, now we have already discussed the provisions of these, so we don't have to discuss it once again, but just to give you an insight, just to recap the provisions, when we did 115 BAA, I came and told you 115 BAA is basically that cases where the company will have a tax rate of 22%. The company will have a tax rate of 22% plus you will have a 10% surcharge plus you have a 4% cess. Okay, effective tax rate will become how much? Effective tax rate will become 25.168. 25.168. This is what the provisions we discussed when we came to 115BAA. Then we did 115BAB, where I came and told the rate will become 15% plus again another 10% surcharge plus another 4% cess. Effective rate will become 17.16. 17.16. This is what we learned in the second chapter. We are going to enhance this a little further. 115BAA, what you read is final. Where I came and told you that if you are a company who chooses to go for 115BAA, you have to be a domestic company. The moment you are a domestic company, you can now either choose the rate of 22% or you can go back to the old rates. Which is 25 or 30. The only difference is if you choose for 25 and 30, you have a surcharge slab. Okay, it starts from 0, 7 and 12. If you do choose for 115BAA, you can have a fixed 10%. You can have a fixed 10% with a 4% cess. This is what your provisions are for 115BAA. Yes. Now, like I told you, I am not going to discuss what and all is going to be removed because those will be discussed in the subsequent chapters as we discuss forward. Right now, what I am going to simply come and tell you is, if you opt for 115BAA, there are certain exemptions and provisions which you have to let go. Which means eventually or automatically your income may increase. So what you have to do is you have to take your increased income, compare it with the normal regime and see whichever is beneficial. The only challenge which you have in this 115BAA is, 115BAA is a fixed provision. What is it? It's a fixed provision. Rahul, what do you mean by a fixed provision? It means that in case you choose to opt for 115BAA, this is what the provision comes and says. In simple words, let's say for example, Rahul, in 2021 I opted for 115BAA. In 2021 I opted for BAA. In 21-22, Rahul, can I come back and check for normal? No. In 22-23, can I again choose whether I want 1 or 2? No. Which means the moment you opt for 115BAA, this becomes your final regime. You can never choose to come outside. If you have decided to come into this regime, you have to follow this forever now. Which means the decision making authority stands with you only in 1 year. And as long as you are there in old regime, no one is going to ask you. The moment you decide to come to new regime, that is where the problem will start. Income tax will come and say, boss, you have decided to come back to the new regime and therefore I will ask you to only opt for the new regime. I will not let you go back to the old regime. Rahul, still, is there an option to go back to old regime? Yes, there is an option to go back to old regime, but you cannot decide it. Assessing officer will decide it. Who cannot decide? You cannot decide. Assessing officer will decide it for you, which means in case assessing officer finds out that you are violating certain provisions, in that case, assessing officer can decide to move you back to old regime. Let's say for example, in a year you were supposed to not claim 2 items. Because you have opted for the new regime, but by mistakenly you claimed it. Assessing officer has 2 options. Option number 1, he will come and say, boss, I will remove those exemptions. And keep you in 115BAA. Option number 2, he can come and say, you violated the conditions which are given in 115BAA, so I am moving you back to old regime. Rahul, assessing officer moved me back to old regime. Can I come back to new regime? No, cannot come back to new regime, which means once a decision made, final decision. You decided to go into 115BAA, you will be there in 115BAA. Assessing officer moves you out of 115BAA, you will forever now be in new regime. That is how the policy is. Apart from this, nothing is great about this chapter. Can we see that? Yeah, let's read it together. It says, all domestic companies, whether it is manufacturing or otherwise, can claim for 115BAA. The benefits which are available to you is, you can opt for a concessional regime of 25.168, which is nothing but a 22% flat tax, 10% of flat surcharge and a 4% of flat cess. Yes, income taxable at special rates will continue to be taxable at their special rates. Rahul, my total income has LTCG. Will LTCG also become 25.168? No. LTCG will continue to be its own rates. LTCG will continue to be its own rate. So which means if it is 10% or 20%, you continue with the same logic. You continue with the same logic. This is a rate given to you only for your Finance Act incomes. Only for your Finance Act incomes, which means those incomes which are taxable for 25 and 30 will become 25.168. Balance incomes will remain as it is. Balance income will remain as it is. See, income taxable at special rates will continue to be taxable at their respective rates. Those will not change. Those will not change. Last item you can ignore. We will discuss when we do the subsequent chapter. We will discuss when we do the subsequent chapters. Look at what the conditions are given. The company should not claim certain benefits or exemptions. What benefit or exemptions I am talking about? I am talking about those which we will discuss in the subsequent chapters. Those we will discuss in the subsequent chapters. Next, where the company violates any of the above conditions, the option exercised would become invalid for the year of violation and all the subsequent years. Which means it shall become taxable at the general rates of 25 and 30% as if the option was never exercised. As if the option was never exercised. I will come and say, boss, I don't even know that you were eligible for it. For the year of violation and all subsequent years, you will permanently go back to old regime. You will permanently go back to old regime. Then a company can opt for this option by filing Form 10IC on or before the due date of filing of return of income, for which the assessment year for which the option is sought to be availed. Which means they are not giving a timeline. They are not giving a timeline. Let's say, for example, you are a person where this provision was introduced in 1920. This provision was introduced in 1920. Rahul, in 1920 itself, do I have to opt for this regime? Not required. Rahul, 2021 not required. 21-22 not required. Which means you can decide when you want to first try. You can decide when you want to first try. But the year in which you make the first trial, once the company exercises this option, it cannot subsequently opt out of the same for lifetime. It cannot opt out of the same for lifetime, which means whenever you make this decision, from that year, forever you will be in this regime unless and until assessing officer moves you out. Unless and until assessing officer moves you out. This is what the provisions are. Clear till here? Yes? Yes, ma'am. Once opted, it is permanently this regime only for you. You cannot come outside. Okay, that's what I'm telling you. The moment you make a decision that you want to opt for this regime, you can never opt out again. You can never opt out again. You have to follow this regime forever. Unless and until assessing officer itself comes and tells I am moving out. If the assessing officer makes a decision to move you out, in that case you will come out. But then after you come out, you can never come back again. You can never come back again. So either make a decision to stay or make a decision to leave. That's all is the answer. The moment one of those decisions are made, none of the changes can be made ever. None of the changes can be made ever. Yes or no? Yes or no? Yes. This is what the provisions are. This is what the provisions are. Moving forward. Moving forward. The 115 BAB. The 115 BAB, where I came and told you that if you are planning to opt for a new manufacturing company, if you're planning to create a new manufacturing company, in that case, you can claim a 115 BAB. You can claim a 115 BAB. This 115 BAB basically comes and says that if at all you have any income tax, you can tax it at the rate of 15%. It is neither 25 nor 30 nor 22. You can go to 15%. You can go to 15% plus a flat surcharge of 10% plus a flat cess of 4%, effectively 17.16. Effectively 17.16. Look at the provisions. It says all domestic companies engaged in the manufacture and production of an article. Engaged in the manufacture or production of an article with a condition that you should be set up and registered on or after 1st October 2019. On or after 1st October 2019. Rahul, what is this 1st October 2019? This was the year in which the new regime was introduced. This was the year in which the new regime was introduced. So they came and said, I have introduced this new regime from 1st October. You decide whether you are creating the company after 1st October or before 1st October. Rahul, I created the company in 30th September. Can I go for 115 BAB? No. Can I go for BAA? Yes. You can go for BAA because it is before October. Because it is before October. Rahul, after October, I have created a company. Can I opt for 115 BAB? Yes. But Rahul, the company is into service sector, then you go back to 115 BAA. You go back to 115 BAA. This is only for a domestic manufacturing company created after 1st October. Created after 1st October. Yes or no? Yes or no? Yes. Now, like I told you in the last class, generally the rate given is 15%. Generally the rate given is 15%, but income tax is also given additional rates. Income tax is also given additional rates. They came and said, boss, I was introducing this provision for you because I want to support your manufacturing sector. I want to support your manufacturing sector. So I will let you take this beneficial rate of 15% only for the manufacturing part of the business. Only for the manufacturing part of the business. Balance part and all, I will not let you take this. Balance part and all, I will not let you take this. Balance part and all, it is simple and same as 115 BAA. It is simple and same as 115 BAA. So they notified multiple rates. They notified multiple rates. Let's read the rates together. Let's read the rates together. It says income from business of manufacture or production and generation of power. They said 15% plus 10 plus 4, 17.16. 17.16, which means if you get any income from manufacturing, then I will give you 17.16. Then I'll give you 17.16. Rahul, it is not from manufacturing. What else can it be? They said if it is any special gains. If it is any special gains, the one which we discussed yesterday, the capital gains, the winnings and all those things, they said use the same rates. Use the same rates. So if it is capital gains, it will be 20%. If it is long-term capital gains, it will be 10%, all those things. Okay, so those rates will continue. Those rates will continue along with the 10% surcharge, along with the 4% cess. Along with the 10% surcharge and 4% cess, that rates will continue. The change happened in the next two. The change happened in the next two. They came and said, Rahul, STCG on transfer of capital assets on which no depreciation is allowable. STCG on transfer of capital assets on which no depreciation is allowable. So they came and said, Rahul, capital gains, there are 4 items. Capital gains, there are 4 items. First item is 112A, then it is 112, then it is 111A, and then it is Finance Act. Then it is Finance Act. They said, Rahul, on the Finance Act or STCG, in that Finance Act or STCG, there are 2 kinds of STCG. One is depreciable assets STCG, one is other assets STCG. One is depreciable assets STCG, one is other assets STCG. Depreciable assets STCG continues to be 15. Depreciable asset STCG continues to be 15. Balance assets, it will become 22%. Same as 115 BAA. Same as 115 BAA. Rahul, why, what and all? Think about it now. If it is not a depreciable asset, it means it is irregular transactions. It is irregular transactions. Have you done it because of your manufacturing or have you done it normally? Have you done it because manufacturing or normally? You have done it normally. Yes. If it is not related to your manufacture, they came and said it is 22%. It is 22%. You cannot claim the benefit. You cannot claim the benefit. This is what the provisions are. This is what the provisions are. Okay, so repeating it once again, what happens is if you have an STCG on which you do not have a depreciation, in that case it will become 22%. It will become 22%. And the last item they are coming and saying any kind of income which is not incidental to the manufacture business. Any kind of income which is not incidental to manufacture business. Abdina enna artha Rahul? Let's take a simple example that you are into manufacturing. You are into manufacturing. Separately, you are also doing sale, renting of house. You are also doing renting of houses. Now, renting of houses is linked to manufacture, not linked to manufacture. Not linked to manufacture. Therefore, it will be 22%. It will be 22%. Same example, if you are in IFOS. If you are in IFOS you have some income. You have some income. Let's say, for example, dividend income. Dividend income. Now, the income which you are getting as dividend, is it linked to your manufacture? No. In that case, can I claim for 15? No. They came and said in that case, it will become 22%. It will become 22%, same as your 115 BAA. Same as your 115 BAA. So they are simply coming and saying, take your income split into 4. Take your income split into 4. If it is purely for manufacturing, 15. If it is purely in the nature of special incomes, then special tax rates. If it is an STCG which is not depreciable, then it is 22%. If it is any other income which is not linked to manufacturing, 22%. The only thing is the last part which you see, the last part which you see where they are saying income not linked to manufacture, they said it is not just 22%. It is 22% of the gross revenue. It is 22% of the gross revenue. What is gross revenue, Rahul? It means they said no deductions allowable for you. No deductions allowable for you. If you notice, this has technically become same as your special incomes. It has become same as your special incomes. If you notice, you remember I told you, winnings and all, I came and said you it is 30% of your gross revenue. It is 30% of your gross revenue. Same logic. They're saying it is 22% of the gross revenue, which means you cannot claim any deductions or exemptions. You cannot claim any deductions or exemption. That is what I've given on the bottom. I'm saying income which is taxable at 22% and not linked to manufacturing, you will not be eligible for any expenditure or allowance. You will not be eligible for any expenditure or allowances. Please highlight this part, taxable on a gross basis. Please highlight the part of taxable on a gross basis. This is important. Please highlight the part as taxable on gross basis. Now understand this taxable on gross basis is only for the last part. Don't end up claiming it for STCG and all. Don't end up using it for STCG and all. STCG and all, you can still claim the deduction. This is only for your last income. Yes or no? Yes. If I have to put it out in a format, I'm saying 115 BAB. If you take your heads of income, let's do it in a heads of income format. A first head of income is salaries. Can you have salaries income for company? No. Which means next is IFHP. Can you have IFHP income for companies? Yes. What is the tax rate, Rahul? Hey, is it linked to your manufacturer? No. Therefore, rate will become 22% on gross basis. It will become 22% on your gross basis. Yes or no? Yes. Next is your PGBP. In PGBP, it will become 15%. After PGBP comes capital gains. Now in capital gains, I told you have to split. One is called as 112A. Rate is 10% in excess of 1 lakh. 10% in excess of 1 lakh. Yes or no? Yes. 112A. Next is 112. Rate will become 20%. Then it will become 111A. Rate will become 15%. Balance is others STCG. This others STCG, I'm now going to split into two. I'm going to say depreciable assets and others. Depreciable asset, I will say still 15%. Others, I will say 22%. Yes or no? Yes. After capital gains, you have other sources. Now, in other sources, I will come and ask you whether it is any kind of winnings or online winnings. Then I will say the rate is 30%. Will I ask you if it is unexplained income? Rate will become 60%. Anything else, all that royalty and all those things, those respective rates. If it is any others, Rahul, is this linked to my manufacturing? No. Therefore, rate will become 22% on gross basis. 22% on a gross basis. Yes or no? Yes, this is how your incomes will look like. See if you understand now. Tell me if we can go forward. Yes. Okay. Now, in this, what basically happened is, if you notice, no matter what rates they give, at the end of the day, is this provision beneficial for you, not beneficial for you? Is this provision beneficial for you, not beneficial for you? It is beneficial for you. Yes, a company is having 15% tax rate. 100%, can you save taxes in this? 100%, yes. Yes, how, Rahul? Imagine, no, there is a company called A Limited. This A Limited is an old company. It is there from 1997. That is there from 1997. At best, this company can opt for either 25 or 30, or the company will opt for 22%. Yes or no? Or the company will opt for 22%. Now, this company wants to save taxes. This company wants to save taxes, wants to go to that 15%. Can it go to 15%? No, because company is already existing. Company is already existing. So what happened is, this company created its own subsidiary. The company created a subsidiary. Now, the company created a subsidiary. Subsidiary was created in 2020. The company created a subsidiary in 2020. This 2020 company eligible for 115BAB or not eligible? Eligible, not eligible? It is eligible. It is eligible. So what happened is, rate becomes 15%. Rate becomes 15%. Now, you are that company owner. You are that company owner. Tell me, will you like to have more profits in A Limited, or will you like to have more profits in AA Limited? You would like to have more profits in AA Limited because rate is lower. So what happened is, A Limited started giving all goods. To A Limited at a higher cost. I'm sorry, at a lower cost. At a lower cost. Now, if A Limited is giving all the products to A Limited at lower cost, what will happen? Here, the revenue will fall. Yes, if the revenue falls, profit will also fall. If profit also falls, tax will also fall. Yes or no? Yes. On the other side, AA Limited is getting everything at a cheaper price. Which means the profits for a AA Limited will be more. Tax will also be more. Yes or no? Yes. At the end of the day, tell me, both are same company owners or different company owners? Same company owners. So technically, A Limited is trying to shift his profits. In the market, he would have sold this product for 50 rupees. Here it is only selling for 5 rupees. He's only selling it for 5 rupees because he's purposely trying to make a loss. So that the other company will make more profit and the other company will pay lesser taxes. At the end of the day, are you trying to shift your profit? Not shift your profit. You're trying to shift your profit from A Limited to AA Limited because the benefit is coming to you. Yes or no? Yes. Income tax came and said, if you try to do such transactions, where you try to shift your profits, and show more profits in AA Limited, this profit which you get will now not be taxable for 15%, it will become taxable for 30%. How much will it become taxable for? It will become taxable for 30% because they are coming and saying you tried to cheat the government. By shifting your profits. So the provision comes and says, where due to the close connection between two people, the new company is going to be given a benefit. Of increased profits. Only because of the close connection both the people have. Whatever profits with the new person gets will be deemed to be taxable at the rate of 30%. Will be deemed to be taxable at the rate of 30% plus 10% surcharge plus 4% cess. Yes or no? Yes, Rahul, how do you do this? Let's take a simple example that the cost for this person was 100. Generally, when he sells this product in the market, he sells this for 250. And earns a profit of 150. But what happened is, he sold to this person for 120. He sold to the other person for 120, which means he only earned a profit of 20. Now, because he sold it to this person for 120, this person's cost becomes 120. Yes or no? This person's cost becomes 120. He was anyway planning to sell it for 300. He was anyway planning to sell it for 300. So he made a profit of 180. He made a profit of 180. Now tell me, technically how much he should have made a profit? He should have only made a profit of 50. Why, Rahul? Because he should have got this product for 250. He should have got this product for 250, which means he should have only made a profit of 50. But he ended up making a profit of 180. In this case, what will happen, Rahul? The 50 will become taxable at 15%. Because that is still genuine for you. The balance 130 will become taxable at the rate of 30. The balance 130 will become taxable at the rate of 30. Why? Because, Rahul, the normal profits which you made will become taxable at the normal 15% rate. The extraordinary profits which you made solely because of you having a close connection will become taxable at the rate of 30%. Will become taxable at the rate of 30%. See if you understood the example. Yes. Okay. Read the provisions. Income treated as excessive by the AO due to close connection of the company with any other person. Now notice, they have not even defined what the other person is. They are simply saying due to close connection of the assessee. Who will decide what is the close connection? Assessing officer will decide. He will not let you decide. It is not like in transfer pricing and all, you have AE concepts and all, where they will come and tell you who is your related party. No. Here they are coming and saying, Rahul, I will decide who is the close connection for you. It can be any person. Who assessing officer deems fit. A very vague provision where they are saying, boss, I will decide what your close connected person is, and if I see you finding excessive profit, I will tax it at 30%. Yes or no? Yes. Let's read the conditions. I am saying you should incorporate your company after 1st October 2019. And they said you should commence manufacturing before 31st March 2024. So they're saying, boss, you incorporate the company after 1st October. After that, you start working. At best, if you work before 31st March 2024, I will give you the provision. After 1st April 2024, you are not eligible for this provision. Question to you, what is your previous year? 23-24. In 23-24, will you be satisfying this condition, not satisfying this condition? You will be satisfying this condition, which means for your exams, this scenario is not applicable. You can never have a scenario where you could not have started your manufacture. If a question comes and says that there is a 115 BAB company, it is assumed that he has already started manufacture. Yes or no? Yes. Now, I am trying to find out ways where I can save taxes. One way I told you, I will create a subsidiary. I will transfer all my assets to that subsidiary, and I will come and say, boss, you earn more profits, for which I came and said not allowed. Now, because this model was not allowed, what I did is I followed another model. Rahul, what is this other model? I am A limited. I have created manufacture from 1997. I am doing manufacture from 1997. Rahul, what is the best rate I can opt for? I can opt for either 25, or I can opt for 30, or it will become 22. Now, what happened is, Rahul, this company is into existence from 1997. Can it claim 115 BAB? No, it cannot claim 115 BAB because the company has to be after 1st October 2019. So what happened is, this company decided, I will create another company called as B Limited. Now, Rahul, this B Limited is going to start working. Yes or no? This B Limited is going to start working. It is from 2022. It is going to start working from 2022. Is it eligible for 15%? Not eligible for 15%. It is eligible for 15%. Yes or no? But technically think about it and tell me, does B Limited have a business? No. What A Limited is planning to do is, If A Limited was running business, A Limited would have got a tax of 22%. So what A Limited did is, A Limited transferred his business. A Limited transferred his business to B Limited. A Limited transferred his business to B Limited. Now, technically, if A Limited has transferred business to B Limited, is A Limited is in existence, not in existence? Is A Limited in existence or not in existence? It is not in existence. It is not in existence. B Limited is in existence, not in existence. B Limited is in existence. Now think about it. Had you not incorporated B Limited, A Limited would have paid tax at the rate of 22%. You have summa changed the name from A Limited to B Limited and now you are asking for 15. Do you think department will give you 15? Do you think department will give you 15? No, department is not going to give you 15. So therefore they came and said, Rahul, if you create this new company, by any way of restructuring, if you create this company by any way of restructuring, in that case, you are not eligible. Who is not eligible? A or B? B is not eligible. B is not eligible. They are coming and saying, don't try to do all this nonsense with me, people. If you have created this company purely by way of restructuring, where you have technically been an old company, now changed your name. In that case and all, you cannot claim this deduction. You cannot claim this, not deduction, slower rate. You cannot claim this lower rate. You can go back and use your 22, 25 or 30. You can go back and use your 22, 25 or 30, but you cannot claim 15. You cannot claim 15. Yes or no? Yes or no? Yes. Rahul, next scenario. Rahul, I am A Limited. Who am I? I am A Limited. In A Limited, there are two business. What happened is, one business is my hotel business. The other business is my, let's say, FMCG. What is FMCG? Foods. Yes, fast moving goods. So first product is my hotel, second product is my FMCG. Now hotel business is doing loss. FMCG is doing profits. Hotel is doing loss and FMCG is doing profits. Hey, this profit business, will you like to pay tax at 22% or will you like to pay 15%? Will you like to do 22 or 15? You like to do 15, yes or no? You want to pay lower tax. So what happened is, you created a new company called as B Limited. And whatever assets were there in FMCG alone, you went and you gave it off to B Limited. Now tell me, is A Limited in existence, not in existence? Will A Limited continue to be in existence, not continue to be in existence? A Limited will continue to be in existence because it will still run the hotel business. Yes or no? But what happened? The FMCG business, they transferred it off to B Limited. Now what is happening? B Limited is the new owner for FMCG. Yes. Now this new FMCG will be taxable at the rate of 15%. Yes or no? But think about it. Was this business actually newly created or was it just a transfer from A? It was a transfer from A. Had this transfer not taken place, FMCG or profits would have been taxable at the rate of 22, 25 or 30. Yes or no? Which means you're technically trying to cheat the government. By creating a new company or asking for lower rates. Do you think department will agree? No. They came and said, boss, here also not eligible. Go back to 22, 25 or 30. Rahul, how to check this? They came and said, Rahul, you should not transfer more than 20% of your plant and machinery. The company should not have what? Transfer more than 20% of the plant and machinery, which means if I take the balance sheet of the company, I have total plant and machinery. Yes or no? I have total plant and machinery. In that total plant and machinery, if more than 20% is given by someone else, is more than 20% is given by someone else, I will come and say, then you are trying to cheat me. Then you are trying to cheat me. You are not trying to create a new company. You are just trying to make a old company in a new name. You are trying to make an old company in a new name. In that case, I will not make you eligible. I will not make you eligible. You will only be eligible if less than 20% of your assets are from any other person. Are from any other person. Yes or no? Yes or no? Yes. Let's read the provisions. Let's read the provisions. It says, company should not use any plant and machinery previously used for any purpose in India. The company should not use any plant and machinery previously used for any purpose in India, which means when you create the company, you should have new assets. You should have new assets. You cannot use old assets. Second-hand assets are not permitted. Second-hand assets are not permitted. Notice the word very carefully. For any purpose in India. For any purpose in India, which means if you are importing a product, if you are importing a plant and machinery, even if it is used outside India, even if it is second-hand, I am okay. I am okay. It should just not be any Indian use asset. It should not be any Indian used asset. As long as it is a foreign used asset also, I will treat them as a new asset. I will treat them as a new asset. And also notice the word called as use. Also notice the word called as use. The reason I am telling you this is because in other sections or other chapters when we read, they will not use the word use. They will not use the word use. They will use the word formed. What will they use? Formed. Rahul, what is the difference? The difference is they are coming and saying that, Rahul, in the other sections, they will only look at it in the year of formation. They will only look at it in the year of formation. When you created the company, in that year alone, if it was more than 20%, then in that case not eligible. In that case not eligible, which means second year, Rahul, second year I made 20% increase. Is it eligible? Yes, it is still eligible because there the word used is formed. There the word used is formed. Here they are using the word use. Rahul, what is the difference? It means in 115 BAB, I will not check this condition in the first year alone. I will check this condition every year. I will check this condition every year. The year in which this condition gets violated, you are out of 115 BAB. The year in which the condition is violated, you are out of 115 BAB. You are out of 115 BAB. Yes or no? Yes or no? We have a question to do. We will do that question and you will understand better. Right now, do you understand what I am talking about? Yes. So the company should not be using any plant and machinery previously used in India except for up to 20%. Except for up to 20%. You can use up to 20% worth of assets. You can use up to 20% worth of assets. Up to 20% I have no problem. Up to 20% I have no problem. After 20% I will see violation. I will see a violation. Second, I am coming and saying if you have imported any plant and machinery from outside India, it will be treated as a new plant and machinery. If you import anything from outside India, I will still consider it as new plant and machinery, which means it will not be forming part of my 20%. It will not be forming part of my 20%. Yes or no? Yes or no? Yes. Yes. Point number C. They are coming and saying the building should not be, the business should not be formed by splitting up or reconstruction of business. The building should not be formed by splitting up or reconstruction of business. The first example I told you. You have just like that taken your whole business and given it off to someone else. That is called as splitting up or reconstruction. Not allowed. Not allowed. In that case also new company will not be eligible. New company will not be eligible. Yes. Next. The company should not use any building previously used as hotel or convention center on which deduction under 80 ID has already been claimed. 80 ID has already been claimed. They are coming and saying that, Rahul, if at all you are in hotel business, if you are in hotel business, very long back there used to be an exemption section. Very long back there used to, sorry, not exemption, deduction section. Very long back there used to be a deduction section where they used to come and say, if you have created a hotel business for yourself, the profits of that business were not taxable. The profits of the business were not taxable. So they are coming and saying, in that hotel business, if you had used a if you had used a building, keep the building to that hotel itself. Don't bring it to this hotel. The new asset, the new company cannot have this hotel buildings. The new company cannot have these buildings. Understand, there are no conditions given. Rahul, one building also if you transfer, it will become violation. One building also if you transfer, it will become a violation. Yes, so you cannot have a single building which is already claimed as a deduction earlier. You cannot even have a single building on which you have already claimed a deduction earlier. Yes or no? Yes or no? Yes. Then they are saying the company should not be engaged in any business other than manufacturing or production. Any business other than manufacturing or production, and any incidental activities thereto. And any incidental activities thereto. Incidental means any kind of research or distribution. Any kind of research or distribution, which means they are coming and saying that, Rahul, there is a company called Reliance. There is a company called Reliance. Now Reliance has Reliance Industries. Yes or no? Yes or no? Now Reliance Industries is making manufacturing. The Reliance Industries is doing manufacturing. At the same time, they are also into selling. At the same time, they are also into selling. Is that company eligible, Rahul? No. The company is not eligible. They are coming and saying the manufacturing company should only do manufacture. The manufacturing company should only do manufacture. If they do anything other than manufacture, they are not eligible. If they do anything other than manufacture, they are not eligible, which means they cannot do any kind of trade, sales, advisories, profession. Nothing is eligible. Nothing is eligible. You should purely be into business. You should purely be into business of manufacturing and generation. If you do anything apart from that, you are not eligible. You are not eligible. Second, they are coming and saying, Rahul, when you talk about manufacturing, power sectors are also manufactured. Power sectors are also manufactured. So if you are into the business of generating power or electricity, if you are into the business of generating power or electricity, you are still eligible. You are still eligible. So two kinds of business I have told you which are eligible. One is called as manufacturing business. The other is called as generating power business. The other business is called as generating power business. Apart from this, they have notified certain items which are not eligible. They have notified certain items which are not eligible, which they are coming and saying that, yes, I know they are manufacturing or production. I know they are manufacturing or production, but I am specifically removing them. I am specifically removing them, which means, Rahul, these businesses can claim deduction, not claim deduction. Can these businesses claim deduction, not claim deduction? They cannot claim deduction. They cannot claim deduction. Rahul, what are the items? They are saying development of any computer software. Development of any computer software. If you are developing any computer software, then in that case you are not eligible. It may be a production, but it is still not eligible. Next, mining. Next, mining. They are coming and saying, Rahul, if you are into the mining business and all, you are finding out products for me. You are finding out products for me. You are not producing it. You are not manufacturing it. Therefore, not eligible. Therefore, not eligible. Then, conversion of marble blocks or similar items into slabs. Conversion of marble blocks or similar items into slabs. What is this, Rahul? What is this, Rahul? In houses and all, you will see, in houses and all, they'll bring this big marble. They'll bring this big marble. They'll cut that marble and they'll put tiles and all. Yes or no? Yes. So all these things are not manufacturing or production. All these things are not manufacturing or production. Next, bottling of gas into cylinder. Bottling of gas into cylinder. Abdina, LPCG. Yes, LPG you have, no? LPG or a cylinder, like you have to put gas and all, no? That and all is not manufactured. That and all is not manufactured. Then printing of books or production of cinematographic films. Printing of books or production of cinematographic films. If you plan to print books and all, you will not be eligible. You will not be eligible. If you plan to shoot movies and all, you will not be eligible. Why are they clarifying this very clearly? Because understand, printing of books and all is production. Yes or no? Printing of books is production. They came and said, Rahul, while it is production, I still don't want to make you eligible. I still don't want to make you eligible because you are not bringing one new thing into existence. You are not bringing any new thing into existence. You already have one copy. You are just making multiple copies. You are just making multiple copies. It is not eligible. It is not eligible. Yes, sir. Yes, sir. Next. Next. Any other business as may be notified by central government. Any other business which may be notified by central government. Rahul, as of now, is there any business notified? No. There is no business notified. These are the only items. These are the only items. Yes or no? Yes or no? Yes. What are the items, Rahul? First item, development of computer software. Then minings. Then printing of books. Conversion of marble blocks. Bottling of gas. And any other business. And any other business. Rahul, from exam perspective, do you have to read all this? No. You don't have to read all this. Probably the only one thing which I will feel important is the computer software part. The one thing which I may feel important is computer software part. In case exam late comes and says that there is a company which is developing computer software, can you claim 115 BAB? Can you claim 115 BAB? No. You cannot claim 115 BAB. You will go for normal rates. You will go for normal rates. Then they are coming and saying the company shall not be eligible for certain benefits or incentives. Certain benefits or incentives. I told you we will discuss later. We will discuss later. Right now, not relevant. Right now, not relevant. Yes. Now, if you notice, I have given you so many conditions. I have given you so many conditions. One condition, you should start manufacture. Second condition, I am saying you should start your operations by 31st March. You should not be into these business. You should not have taken an old building. You should have not done any business restructuring. You should have not done any 20% plant and machinery transfer. So many conditions I have given to you. Rahul, I ended up violating one of the conditions. I ended up violating one of those conditions. Am I eligible for 115 BAB? Am I eligible for 115 BAB? No. No. Rahul, 1 year I violated the condition, Rahul. Next year I am satisfying the condition. Can I come back to 115 BAB? Can I come back to 115 BAB? No. So they came and said, Rahul, if at all it is found out that you are violating any of the conditions, if you are finding out that you are violating any of the conditions, 115 BAB going forward not eligible. Going forward not eligible. BAB. 115 BAB. I violated 115 BAB. I violated 115 BAB. Do I have to directly go to 25 or 30, or can I still try 22? Can I still try 22? You can still try 22. You can still try 22. I'll give you an example. Let's say, for example, you are into manufacturing. You're into manufacturing, but you're doing one of these manufacturings. You're doing one of these manufacturings. Hey, have you violated any condition of 115 BAB? Yes. Have you violated any condition of 115 BAA? No, because 115 BAA says any domestic company can come and claim. Yes or no? So, if 115 BAA is allowing any domestic company to claim, can you come and claim under 115 BAA? You can still do that. You can still do that, which means if you have any common conditions between both, if you have any common conditions between both and that you violate of, from 115 BAB you cannot go to BAA because that is also violated, then you will go to directly normal. But if you are violating 115 BAB, I am also giving you a second chance. You can go back and look for 115 BAA. You can go back and opt for 115 BAA and be in 115 BAA forever. Rahul, 115 BAA also I violated. You will go back to normal. Rahul, can I come back again? No, you cannot come back again. Yes or no? Yes or no? Yes, read it with me. It says, where the company violates any of the above conditions, the option exercised would become invalid for the year of violation and all the subsequent years. However, where the violation is of condition C to E, where the violation is of a condition C to E. Think about it. No? I am telling violation should be of a condition C to E, which means you should not have a restructuring, you should not have used a building, you should have not done manufacture and all. Hey, is this conditions there in BAA? Is this condition there in BAA? No, these conditions are not there in BAA, which means can you still opt for BAA? Yes, the company may choose to opt for 115 BAA. The company may choose to opt for 115 BAA. So, in case you violate BAB, you can still go for BAA. You can go for BAA. Yes or no? Yes or no? Yes. Next. Rahul, what happened is, there is a company called A Limited. There is a company called A Limited. There is a company called B Limited. There is a company called A Limited. There is a company called B Limited. A Limited is eligible for 15%. So, A Limited is claiming 15% tax. B Limited is also claiming 15% tax. A Limited and B Limited decide that, boss, we both are claiming 15% tax. Therefore, let's get amalgamated. Amalgamated meaning two businesses are going to join together. Now the question is, they both amalgamated and created a new company called as C Limited. Rahul, is C Limited eligible for 15%? Is C Limited eligible for 15%? Yes. C Limited is eligible for 15%. Hey, in this case, will you come and say, Rahul, C Limited is created by forming of restructuring of business. Technically, C Limited is formed by what? It is formed by transfer of business from A and B, yes or no? So, it is a splitting up or reconstruction. Can I come and say condition violated? No. Because both the companies were eligible. both the companies were eligible. You have just created a new company taking both the companies together. In this case, C Limited is also eligible for 15%. C Limited is also eligible for 15%. Rahul. A Limited is 15%, B Limited is 22%. B Limited is 22%. B Limited was not eligible. Now you have created C Limited. Can C Limited claim 15%? Can C Limited claim 15%? No. C Limited cannot claim 15%. C Limited has to go back to 22% because one of the companies were not eligible. Yes or no? Yes. C. It says where an amalgamation takes place subsequently, the amalgamated company can claim the benefits of 115BAB only if the above conditions continue to remain satisfied even post amalgamation. So amalgamation mudichadukku appo kuda if the conditions are being satisfied which are given above, then you can claim the deduction, then you can claim a lower tax rate, or else you have to go back to 25, 30 or 22. 25, 30 or 22. Yes or no? Yes. Next, the one which I spoke about. If the AO is of the opinion that owing to its close connection with any other person, the company has derived more than ordinary profits from the business transacted with such person. Then the AO shall compute the profit of the business, and any excess profit shall become taxable at the rate of 30%. Any accessible tax profits will be taxable at the rate of 30%. I told you, 180 oda profit length, 50 I told it is normal taxable, 130 has become excess profit, that will become taxable at the rate of 30%. Exceptions are given to you in transfer pricing. When we do transfer pricing, we'll come back to this. Right now, you won't understand it. Yes. Next, Rahul, how to claim this benefit? I have to opt for the same. And understand the provisions are coming and saying that you have to opt it in the first year of decision making. You have to opt for the same in the first year of decision making, which means the year in which your company was incorporated. Will you file a return, not file a return? You will file a return. They said in the first return which you file itself, you tell me whether you want to do 115BAB or not. In the first return itself, you come and tell me whether you want to do 115BAB or not. Rahul, I created my company today. I filed my return, forgot to do 115BAB. Can I claim 115BAB next year? No, you cannot claim 115BAB next year. Next year, what can you do? You can only claim 115BAA. Which means if you violate the condition of filing your application by the first return, you will not become eligible. Yes or no? Yes. And the last thing, like I told you, once the company exercises this option, it shall not be subsequently opting out of the same for lifetime. Yes or no? Yes. Let's recap the provisions. We were doing 115BAA and BAB. In BAA, we simply came and said you have to do 22% plus 10% surcharge plus 4% cess. If you violate the conditions, you can not come into the section. Assessing officer can move you out. When it comes to 115BAB, we came and said you should be a domestic manufacturing company which is created after 1st October 2019 and should have commenced manufacture before 31st March 2024. You are having a normal tax rate of 15% only for your business operations. If you have any special tax rates, it will be taxable at special tax rates. If you have any kind of short-term capital gains which are not depreciable, then it is 22%. If you have any other income which is not linked to manufacture, then it will become 22% without allowing any kind of expenses. But if assessing officer finds out that you have done excessive profit, it will become 30%. If you want to create this new company, Rahul, the new company should not have more than 20% of their plant and machinery coming from used business, coming from used in India. Second, they are coming and saying it should not be done by restructuring or splitting up. Then they are coming and saying you should not have used any building on which you claimed a deduction earlier. And then they are coming and saying if you choose to take this 115BAB, you have to stick to 115BAB. But if you violate any of the conditions, you will be taken out of 115BAB. You still have an option to go for BAA. You still have an option to go for 115 BAA. If you violate any BAA also, then you will become normal. Rahul, I want to do 115 BAB. What I need to do, in the first return which you file, you need to file an application. Before the first return which you file, you need to file an application and inform the assessing officers that I am planning to do 115 BAB. Which first return? In the first return. Rahul, BAA in the condition irka? No. The year in which you decide to go for BAA, that year you file an application. From that year, future, every time it will be available. From that year, future, every time it will become available. Yes or no? Yes or no? Yes. Yes. What I'm going to do is, since there are no questions in this, I have created two questions for you. We're going to discuss those two questions. Okay? We're going to discuss those two questions. You tell me out if you understand from those two questions. Otherwise, we'll discuss it once again. Shall we look at the question? Yes. I will share the PDF with you later on, people. Okay, don't worry about it. Yes, we are looking at additional questions for practice. Look at the question and tell me what is happening. Okay. The first question comes and says, there is a person called Jerry Limited. A domestic company who's incorporated on 22nd October 2023. 22nd October 2023. Hey, have you incorporated after the condition or before the condition? Satisfied, not satisfied? You're satisfying, not satisfying? Satisfying. Very good. Okay. So you're a domestic company who's incorporated on 22nd October 2023 and is engaged in the business of manufacture of cheese. Are you manufacturing, not manufacturing? Eligible, not eligible? Eligible. The company purchased new machinery aggregating to the value of 45 crores, all of which were put to use before 31st March 2024. You have purchased how many? 45 crores. All these are new machinery. Any condition violated right now? No. Next, Jerry Limited also entered into an agreement with Nibbles Limited. Who is another domestic company to purchase all the machinery in cheese production unit of a total value of 15 crores. They basically went to Nibbles Limited and they came and said, you already have a cheese business. In that business, you already have assets worth 15 crores. You do one thing, you give me that assets also. Now tell me, current year, how many assets do you have? You have 45 crores of new assets. And then you have second-hand assets of 15 crores. Yes or no? Total assets you have is 60 crores. Now, if you remember, income tax comes and says that if you want to claim deduction under this chapter, out of your total assets, 20% should not be old assets. Yes or no? Out of the total assets which you have, 20% should not be more than old assets. Now tell me, 60 crores is that 20% you can have old assets, which means how many can you have old? How many can you have old people? 16 to 12, it will become 12 crores. So which means maximum you could have had 12 crores old machinery. You have in your hand 15 crores old machinery. Have you satisfied condition or violated condition? You have violated the condition. If you have violated the condition, Rahul, can I give you the 115 BAB deduction? Can you claim 115 BAB, Rahul? No, you can't claim 115 BAB. Why? Because, Rahul, you need to have only 20% of the plant and machinery as a old machinery. They are saying the net profit for the year ended 31st March 2024 is 36 lakhs. So they gave you the net profit. Jerry Limited had opted for the concessional tax regime of 115 BAB and has computed tax at the rate of 17.16. However, assessing officer is passed an order contending that Jerry Limited has violated the conditions of 115 BAB and has therefore computed tax at the rate of 30% plus an applicable cess of 4%. How much? 30% plus an applicable cess of 4%. They are coming and saying, boss, the Jerry has violated the condition, so I asked him to pay tax at 30%. I asked him to pay tax at 30%. The assessing officer also mentioned that Jerry Limited will not be eligible to opt in for any other concessional regime for any subsequent years also. You will not be eligible to opt for concessional regimes for any other subsequent years also. You are required to discuss the validity of the conditions of assessing officer. You are required to discuss the validity of the contention of assessing officer. Contention of assessing officer, first assessing officer is coming and saying 115 BAB violated. 115 BAB violated. Condition number 2, they are coming and saying future no more benefit for you. Future no more benefit available to you. First of all, can 115 BAB be claimed or not claimed? Can 115 BAB be claimed or not claimed? It cannot be claimed. Why, Rahul? Condition comes and says you should not have more than 20% of the plant and machinery which is old. In this says you have more than 20% and therefore the 115 BAB cannot be claimed. 115 BAB cannot be claimed. Is the assessing officer right? Not right. Assessing officer is right. Great. Next, assessing officer is coming and saying in future you cannot claim any concessional regimes. In the future you cannot claim any concessional regimes. Is the assessing officer right? Not right. Is the assessing officer right? Not right. He is not right. He is not right. Rahul, why is he not right? Understand, I told you, even if you have violated 115 BAB, I still have an option to opt for 115. Very good. I still have an option to opt for 115 BAA. So even though I violated the conditions of 115 BAB, I can still claim for 115 BAA, and therefore this condition which the assessing officer has mentioned is wrong. This condition which the assessing officer has mentioned is wrong. Assessing officer can come and tell me that I cannot claim for 115 BAB, but he cannot stop me from claiming 115 BAA. He cannot stop me from claiming 115 BAA. So assessing officer is partially correct to violate the 115 BAB, but he cannot stop me from claiming 115 BAA. Yes or no? Yes. Will your answer be different if Nibbles is a US based company and the assets which were purchased from Nibbles are directly imported from US? Will your answer be different if Nibbles is a US company and the assets were imported from US? Will the answer be different? Yes, the answer will be different. Why will it be different? Because any plant and machinery which is imported from outside India are treated as new machinery. Which means the 15 crores will also be called as new now. The 15 crores will also be called as new now, which means the whole 60 crores is new machinery. If the whole 60 crores is new machinery, have you violated the conditions? No. If you have not violated the conditions, can you claim 115 BAB? Yes, you can claim 115 BAB. Yes or no? Yes or no? Yes, this is the first question. This is the first question. Theory is there in the book. Okay. Next, a sum question for you. It says Santa Limited is incorporated on 25th October 2023. Santa Limited is incorporated on 25th October 2023. A, within the region or not within the region? Within the period, not within the period. It is within the period, and as a wholly owned subsidiary of Banta Limited. And is engaged in the manufacture of automobile engines. Manufacture of automobile engines. Eligible, not eligible? Eligible. It furnishes you with the following additional information for the year ending 31st March 2024. They are saying that the net profit from manufacture and sale of engines is given as 26 lakhs. The net profit from manufacture of engines and sales is given as 26 lakhs. Rahul, tax rate is? Tax rate is 15%. Why? Because it is from manufacture. Next. Included in the above net profit is a profit from the sale of 500 engines to Happy Limited, another wholly owned subsidiary of Santa Limited. Santa Limited at a price of 30,000 per engine, whereas the normal selling price to the unrelated party is only 28,000. What Santa Limited has done is, Santa Limited normally would have sold it to someone for 28,000. But to this person he has sold it for 30,000. This person which you are talking about is a friend of Santa, not a friend of Santa. Is a friend of Santa because it is Happy Limited, wholly owned subsidiary of Santa. Santa, which means do they have a close connection? Not a close connection. They have a close connection, which means this is a violation of law, not a violation of law. This is an violation of law. You made a 2000 per product extra. You made 2000 per product extra from Happy Limited only to save taxes. Only to save taxes. Hey, on this, will the tax rate be 15%? On this, will the tax rate be 15%? No. On this, the tax rate will be directly 30%. It will directly become 30%. So therefore, the excess profit which you have is 2000 per engine into 500 engines. 2000 per engine into 500 engines, which means how much? It will become 10 lakhs. Yes or no? Yes or no? Which means you cannot claim 15% on 26 lakhs. You only can claim 15% on 25 lakhs. You can only claim it on 25 lakhs. This balance 10 lakhs will be taxable at the rate of 30%. This balance 10 lakhs will be taxable at the rate of 30%. Yes or no? Yes or no? Yes. Next. They are saying during the year, Santa Limited received the following assets from Banta Limited. During the year, Santa Limited received the following assets from Banta Limited. Now, first of all, understand you are in the year of incorporation. You are in the year of incorporation. Banta Limited has given assets to Santa Limited. Banta Limited has given assets to Santa Limited. I told you, you should not take assets more than very good. You should not take assets more than 20% of the plant and machinery. If you end up taking more than 20%, the condition will get violated. The condition will get violated. So first, let's check whether you have taken more than 20%. Let's check if you have taken more than 20%. Yes or no? Yes. The first item which is given is they are telling that Banta Limited has given to Santa Limited units of equity-oriented mutual funds. Units of equity-oriented mutual funds. Question to you: is it a plant and machinery? Is it a plant and machinery? No, this is an investment. This is an investment. Banta Limited bought it for 3.2 lakhs. Banta Limited bought it for 3.2 lakhs, gave it to and bought it in 21-22. And bought it in 21-22. Hey, first of all, you have had an asset received from Banta Limited for free. Capital gains will come into picture. Capital gains will come into picture and come and say when there is a transfer happening from holding company to wholly owned subsidiary, capital gains will not arise. Capital gains will not arise. The cost of acquisition for the new owner will become cost of acquisition of old owner. Period of holding of new owner will become period of holding of old owner. Yes or no? Yes or no? Yes. Therefore, Banta Limited bought it in 21-22. Banta Limited bought it on 21-22. He bought it for 3.2 lakhs. These two now become Santa Limited's cost and Santa Limited's POH. These two becomes Santa Limited's cost and Santa Limited's POH. Yes or no? Yes or no? Next. Units of debt-oriented mutual funds. Units of debt-oriented mutual funds bought it in 4.1 lakhs and 1890 and 1890. Next. Vacant land 7.2 lakhs 2324. 7.2 lakhs 2324. Then WDV of the furniture and fixtures used in the business as on 1st April 2021 2.6 lakhs 1718. 2.6 lakhs 1718. Last item is building 11 lakhs 1617. Building 11 lakhs 1617. Question to you. Have you violated the condition of 20%? Have you violated the condition of 20%? Have you violated the condition of 20%? No. Not even a single violation has come into picture, Rahul, because investment in equity oriented funds is investment, debt oriented funds is investment, vacant land is not an asset itself. Yes, furniture and fixtures is furniture and fixtures, building is building. Building is building. If you recall your PGBP has a block of asset concept. PGBP has a block of asset concept. In that block of asset concept, they are saying, Rahul, 20% of the plant and machinery should not have been taken. 20% of the plant and machinery should not have been taken. Is any of these items a part of plant and machinery block? Is any of these items part of plant and machinery block? No. If none of these items are a part of plant and machinery block, are you violating any conditions? Are you violating any conditions? No, you are not violating any conditions, which means you are still eligible for 115 BAB. Yes or no? Yes or no? Yes. Next, let's read forward. They say a portion of the building was let out for a rent of 35,000 per month for the period November to March 2024. You had a building which you got from Bantano, the factory building. This factory building was actually given out on rent for 35,000 per month from the period November to March. Municipal taxes paid in respect of the building is 13,000. Municipal taxes paid in respect of the part of the building is 13,000. Which head will this be taxable under? Which head will this be taxable under? Will it be under salaries? No. Can it be under PGBP? No, because this is not your business. Can it be under capital gains? No. It can either be under IFHP or it can be under IFOS. Which one is better? It is IFHP. It is IFHP because letting out of any house, even if it is a factory building, will be taxable under the head income from house property. Will be taxable for income from house property. Rahul, rate of taxes. Under 115 BAB, this will be taxable at the rate of 22%. This is income not incidental to your manufacture. So it is 22% on a gross basis. 22% on a gross basis, because it is not incidental to your manufacture. You have to tax it at gross basis. Cannot claim any kind of deductions. Yes or no? Next. They are saying the land which is received from Banta Limited was let out on a lease for a period of November 23 to Feb 24 for 20,000 per month. What did you do? The land which you got, you have let it out. You have let it out for a rent of 20,000 per month. You have incurred some land leveling charges of 15,000 before the land was let out. You have incurred some 15,000 of land leveling charges which were done before the property was let out, and this land leveling charges are not giving rise to any future economic benefits. The land leveling charges are not giving rise to any future economic benefits. Appadina enna artham? Is this revenue expense or capital expense? It's a revenue expense. It is a revenue expense. This land was subsequently sold in March 2024. Your previous year or next previous year? Your previous year or next previous year? It is your previous year. This property was sold for 9.3 lakhs. The expenditure which you incurred for the sale of this land is given as 0.2 lakhs. The expenditure which you incurred for the sale is given as 0.2 lakhs. This is your cost of transfer. Yes. Next. The following assets received from Banta Limited were sold in the month of March 2024. The following assets which are received from Banta Limited were sold in the month of March 2024. You have now sold your equity-oriented mutual funds. You have now sold your equity-oriented mutual funds at a price of 6.3 with an expense of 0.3. Now understand, I told you these are your investments. Which means sale of these will get liable for. Will be liable for capital gains. Which means now you need to decide what kind of capital gains is this. Is it long term or short term? Look at the asset. The first asset is equity oriented mutual funds. For the equity oriented mutual funds, period of holding is normally 12 months. And the applicable section is 112A. Let's see if we have completed 12 months. When have you bought the asset, ma? When has Banta Limited bought the asset? 21, 22. When are you planning to sell the asset? You are planning to sell the asset on March 2024. Have you surpassed 12 months? Not surpassed 12 months. You have surpassed 12 months. If you have surpassed 12 months, the taxable will be long term or short term? It will be long term. If it is going to be long term, it is going to be long term capital gains under section 112A, because this is share market income. Because this is share market income. Yes or no? Yes or no? Yes. Next they are coming and saying it is a units of debt oriented mutual funds. Units of debt oriented mutual funds. You have bought this debt oriented mutual funds on 1819. On what? 1819. You have bought this debt oriented mutual funds on 1819 and you have sold it in March 2024. Debt oriented mutual funds have a period of holding of 36 months. Have a period of holding of 36 months, and if they become long term, it will be under 112. If they become long term, it will be under 112. Tell me, 36 months over, not over? Over. Therefore, this will become long term under section 112. Under section 112. You cannot have 112A because it is not share market income. It is not share market income. Debt oriented is not equity share market. It is a debt share market. It is a debt share market. I am not looking at debt share markets. Okay. Okay. Next, furniture and fixtures. Assuming it is the only asset in the block. Assuming it is the only asset in the block. You bought it for 4 lakhs. You got it for 2.6 lakhs. You have sold it for 4 lakhs. Okay, this is not 21, this is 23. It is not 21, it is 23. You got your opening WDV was 2.6 lakhs. You have sold it for 4 lakhs. Expenses is 0.1. Expenses is 0.1. Rahul, furniture and fixture is a depreciable asset, non-depreciable asset. If it's a depreciable asset, the resultant capital gains will always be short term. The resultant capital gains will always be short term. Yes or no? Yes or no? Yes, this is what the question is. They are asking you to find out the total tax liability of Santa Limited, assuming that the company wants to opt for 115 BAB. Assuming that the company wants to opt for 115 BAB. First of all, you need to come and tell whether can he opt for 115 BAB. First of all, you need to tell whether he can opt for 115 BAB. Hey, look at the question and tell me, are you violating any condition? Look at the question and tell me, are you violating any condition? Are you violating any condition? No, you are not violating any condition. 20% is also satisfied because you have not taken any plant and machinery. You are doing manufacturing and everything, which is everything perfect. The only one place where you may violate the condition. The only one place where you may violate the condition is the part where you are trying to let out. Yes or no? Rahul, why is this a violation of condition? Notice, I told you, a person who's under 115 BAB should only be into the business of manufacture and production and should have only incidental activities relating to it and should only have incidental activities relating to it. Rahul, the assets which you have right now, you have let out. You have let out. Is letting out your business? Is letting out your business? No, letting out is not your business, which means have you violated the condition, not violated the condition? You have violated the condition because you have done an operation which is not a part of your business. You have done an operation not a part of your business. This may be treated as a violation. This may be treated as a violation. The only reason I am telling it is not a violation. The only reason I am telling it is not a violation is because it is not that you have done this in your business. It is that you have done this outside your business, which means it is taxable under the head HP and other source. It is taxable under the head HP and other source. Since it is not taxable under the head PGBP, you are still perfectly fine. You are still perfectly fine, which means Rahul, you should have done something which is not a manufacture and should be taxable under PGBP. And should be taxable under PGBP. Like I told you, trading business. Is trading business a part of PGBP? Yes. Is it a manufacture? No. In that case, have you violated? Yes, you have violated, which means that condition is only applicable in case you have done non-manufacturing activities in business. Non-manufacturing activities in business. These two are other sources and HP. These two are other sources and HP, which means even now, have you violated the condition? Even now, have you violated the condition? No, you have not violated the condition. You are still eligible. You are still eligible. Yes or no? Yes or no? Yes. Now this is the question. Can we do it off? Can we do it together? Yes, let's do it together. Let's do it together. Yes. Now understand, the question is asking you to compute the tax. The question is asking you to compute the tax. But for you to compute the tax, you should first know your income. Yes or no? So let's find out my incomes. Let's find out my income. So I'm going to do additional question for practice. This is question number 2. This is question number 2. Yes. For me to find out this, I need to first find out my income. So my heading will be called as computation of total income of, who is this person? Santa. Computation of total income of Santa Limited for assessment year 24-25. For assessment year 24-25. Yes. Now I told you in the past also, how do you compute tax? How do you find out incomes, Rahul? How many tables do you want? You need to do a particulars along with some tables, right? I told you, if you have only one head of income, 2 columns are fine. If you have any one head of income, 2 columns are fine. In this question, you have all heads of income. You have all heads of income. So you need 3 columns. So you need 3 columns. What I'm going to do is I'm going to create 3 columns. I'm going to create 3 columns. Do it along with me, people. Do it along with me. Do it along with me. I'm going to do particulars along with 3 columns. Can we do it? Yes. Now, what is the first head of income? Go in the sequence. After salaries, first head of income is house property. So income from house property. Income from house property. Yes. What is the rent which I received, ma? What is the rent which I received? I have received a building. Building is let out for 35,000 per month. Building is let out for 35,000 per month. Yes. So 35,000 into how many months? Into how many months? See, November, December, January, February, March. So 5 months. Yes, 35,000 into 5 months. So how much? 1,75,000. 1,75,000. I'm putting it in middle column. I'm putting it in middle column. Now, if I have to remember the HP provisions, HP provision said municipal value or fair value, whichever is higher, versus standard rent, whichever is lower, versus actual rent, whichever is higher. In this question, nothing is given. In this question, nothing is given. Therefore, I am assuming directly rent received is GAV. Directly rent received is GAV. Next, less municipal taxes. Less municipal tax. How much is the municipal tax given in the question? 13,000. Rahul, can you claim this municipal tax? Can you claim this municipal tax? No. No. Why can't you claim this municipal tax, Rahul? Because I'm going to tax 22% on a gross basis. I'm going to tax 22% on a gross basis. Therefore, it will become 1,75,000. 1,75,000. This 1,75,000 is called as your NAV. Yes or no? Yes. In this, I have to reduce 30% and reduce interest on loan. Hey, can I reduce 30%, Rahul? Can I reduce 30%, Rahul? No, I can't reduce 30% because again, no deductions. Interest on loan also cannot be deducted. Therefore, everything will become 0, which means your income from house property is 1,75,000. Your income from house property is 1,75,000. Yes or no? Yes or no? Yes. Next. You have your PGBP income. Next, you have your PGBP income. Next, you have your PGBP income. What is it given? First, net profit. First is my net profit. How much is my net profit, people? How much is my net profit in the question? It is given as 26 lakhs. It is given as 26 lakhs. Rahul, is there any adjustment in PGBP in the question? Is there any adjustment in the PGBP in the question? Yes. What you have to do? You have to remove all your excess profit from happy. Yes or no? Yes, you have made some excess profit from happy. How much have you made excess profit? You have made 2000 into 500. 2000 into 500, which is 10 lakhs. Okay, yes, yes, which means this will be removed. Your PGBP becomes 36 lakhs. Your PGBP becomes 36 lakhs. While the other income is also PGBP, I'm going to show separately. I'm going to put it as excess profit from.
So 26 lakh.
I'm sorry, minus 16 lakhs. Excess profit from happy. Separately, I will show 10 lakhs. Separately, I'll show 10 lakhs. Yes, sir. With me till here? Can we go forward? Yes. I'm done with IFHP. I'm done with PGBP. Third item is capital gains. Third item is capital gains. Now I have multiple capital gains. Yes or no? I have multiple capital gains. First item is LTCG under section 112A. I have LTCG under section 112A. What is the format, people? Generally we do consideration. What is my consideration? It is 6.3 lakhs. Yes, no. Minus cost of transfer. Minus cost of transfer. What is cost of transfer? 0.3 lakhs. 0.3 lakhs. Therefore, my net consideration becomes 6 lakhs. My net consideration becomes 6 lakhs. Now, in the net consideration, I have to reduce my cost of acquisition. For equity oriented funds, my cost of acquisition was 3.2 lakhs. My cost of acquisition was 3.2 lakhs, which means my long term capital gains will now become 2,80,000. Yes or no? It will become 2,80,000. This is no indexation benefit because Rahul 112A cannot claim indexations. 112A cannot claim indexation. Yes? Yes. After 112A, next item is LTCG under section 112. Consideration is 8 lakhs. Consideration is 8 lakhs minus cost of transfer irka illaya. Do you have any cost of transfer? No, you directly have cost of acquisition. You directly have cost of acquisition. You directly have cost of acquisition. How much is the cost of acquisition? It is 4.1 lakhs. Cost of acquisition is 4.1 lakhs. Yes, therefore your long term capital gains will become how much? 3,90,000. Yes. 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 Next item is short term capital gains. Short term capital gains. What are you selling, ma? What are you selling? You are selling two assets. You are selling two assets. One is furniture and fixture. You are selling furniture and fixture. What is your consideration? 4 lakhs. Minus cost of transfer is given as 0.1 lakhs, which means 10,000. Yes. minus cost of acquisition. Number is given as 2.6 lakhs. Therefore, it becomes 1.3 lakhs. Therefore, it becomes 1.3 lakhs. Yes or no? Yes. This is furniture depreciable. Furniture depreciable. Second one is land non-depreciable. Second one is land non-depreciable. If you notice, no, point number 5, they're coming and saying that the land was sold in March 2024 at a value of 9.3 lakhs. At a value of 9.3 lakhs. On this, you incurred a cost of acquisition, cost of transfer. On this, you incurred a cost of transfer. The cost of transfer was 20,000. Therefore, it becomes 9.1 lakh. Therefore, it becomes 9.1 lakh minus cost of acquisition. Rahul, why am I not doing indexation? Because if you notice, the land was bought in 23-24, which means current year only it was bought. Period of holding is less than 24 months. Period of holding is less than 24 months, and therefore it is short-term capital gains. Cost of acquisition will become 7.2 lakhs. Cost of acquisition will become 7.2 lakhs, resulting in my short-term capital gains of 1,90,000. Of 1,90,000. Yes, sir. Yes, sir. Next, you're done with capital gains also. You're done with capital gains also. Left with IFOs. Left with IFOs. Yes, in IFOs, net profit is done. Extra profit is done. These acquisitions are done. Building is also done. Now I'm saying there is a land leveling charge. There is some land let out on lease. There is a land let out on lease. Hey Rahul, why did we not put land into IFOs, IFHP? Because it is land. Because it is land. Land can only be a part of IFOS or PGBP. Cannot be a part of IFHP. Cannot be a part of IFHP. For something to qualify into IFHP, you need a house. You need a house. Yes or no? Yes. So in this, I will say rent received. I will say rent received. How much have I received from land, people? I have received 20,000 per month. 20,000 per month. I got it for November, December, January, February. So which means 1, 2, 3 and 4. So therefore I got it for 80,000. Yes or no? Yes. Less. I have some expenses called as land leveling charges. I have some expenses called as land leveling charges. Rahul, can I claim this land leveling charges? Can you claim the land leveling charges, ma? Can you claim the land leveling charges? No. Why can't you claim this land leveling charges? Because it is 22% taxable without any deductions. It is 22% taxable without any deductions. Therefore, IFOS will also become 80,000. IFOS will also become 80,000. That's all in the question, right? That's all is there in the question? Yes, perfect. Which means you can now find out your gross total income, or since this question does not have any chapter 6a, you can also find out your total income. You can also find out your total income. Add the numbers more quickly. It is 1,75,000 plus 16 lakhs plus 10 lakhs. 26, 27 lakh 75,000, 28 lakh 55, 30 lakh 55, 31 lakh 45, 34 lakh 45, 34 lakh 75, 35 lakh 65, 36 lakh 65, 37 lakh 45. Check. Check and tell me. These are the numbers, ma. Total and tell me. These are the numbers, total and tell me. Thirty? 38 lakh? Okay. So it is 38 lakh 45,000. Done? Done? Yes. Now, since we have found out our incomes, the next step is to find my tax. So I am going to do computation of tax of Santa Limited under section 115 BAB. Under section 115 BAB. Now, if you notice, every item which I have on the top has a special tax rate. Every item I have on the top has a special tax rate. So we're going to put every item one by one. So I'm going to put particulars, then tax rate, and then amount. Yes, no. I'm going to put particulars, tax rate, and amount. Okay, starting from the top, first item was rent of building. Rent of building. What was the amount, ma? Rent of building was 1,75,000. 1,75,000. Tell me, what is the tax rate? Rent of building. Is it an income from manufacture? Not from manufacture. Not from manufacture. Rate will become 22%. Yes, rent will become 22%. Number is 38,500. Number is 38,500. Yes. Yes. Next. Second item was PGBP. Yes. Second item was normal PGBP. It was 16 lakhs. Normal PGBP was 16 lakhs. Rate will become 15%. Why, Rahul? Because it is from manufacture. It is from manufacture. So therefore the number will become 2,40,000. Number will become 2,40,000. Can we go forward? Yes. Yes. Next, excess profit. Next is excess profit. Number was 10 lakhs. Number was 10 lakhs. Rate is 30%. Therefore it becomes 3 lakhs. Therefore it becomes 3 lakhs. Can we go forward? Yes. Next, D. Next, D. After that what we had? We had capital gains, correct? We had capital gains. In that capital gains we had LTCG under section 112A. LTCG under section 112A, it was 2,80,000. It was 2,80,000. 112A comes and says it is 10 lakhs in excess of, 10% in excess of 1 lakh. So 1,80,000 into 10% will give you 18,000. Then we said it is LTCG under section 112 of debt oriented funds. Debt oriented funds number is 3,90,000. Number is 3,90,000. This rate will become 20%. This rate will become 20%. Therefore, it is 78,000. Therefore, it is 78,000. STCG. Now, in STCG, if you remember, we did two. One was depreciable, one was non-depreciable. If STCG is depreciable, is it linked to my business? Not linked to my business. Is it linked to my business? Not linked to my business. It is linked to my business because I am selling business assets. So the rate will become 15%. The rate will become 15%. Number was 1,30,000, I think. 1,30,000. So 1,30,000 into 15% will give me 19,500. 19,500. FG. This was STCG. Non-depreciable. Number was 80,000. Yes. Now tell me, is it linked to business? Not linked to business. What is 1,90,000, ma? Okay, sorry. It is 1,90,000. Now tell me, is it linked to business? Not linked to business. Linked to business? Not linked to business. Not linked to business. Therefore, it is 22%. Therefore, it is 22%. Number is 41,800. 41,800. With this, we're done with capital gains also. Moving to the last item called as IFOS. In IFOS, number was 80,000. In IFOS, number was 80,000. Linked to business? Not linked to business. Linked to business? Not linked to business. Not linked to business. Therefore, it is 22%. Number becomes 17,600. Number becomes 17,600. This is your basic taxes. Total the number. Total number. Very good. The number is 7,53,400. The number is 7,53,400. Rahul, is the question over?
No.
No, you have to now do add mandatory surcharge of at the rate of 10%. So it becomes 75340. 75340. Add both numbers. It will be 8,28,740. On this you will add health and education cess at the rate of 4%. Number 33,150. 33,150, giving you the final tax payable as 8,61,890. 8,61,890. $8,61,890. Note it down quickly. Yes, understood or any doubts? Understood? Perfect. This question basically helps you analyze every income which is there at a different tax rate model. Okay. This question is not there in your study material. I purposely created this question on my own to help you understand that in case a question comes in exam on 115 BAB, how do you analyze the question and what the tax rates will come, at any point of time. ICAI is definitely not going to give you a question like this where they'll simply ask you to find out the tax and all. They'll give you a full-fledged question. And that they'll ask you to find out tax. In that, one or two of these items will be there. You have to be extremely careful about which items to choose for. Okay. In simple logic, what will happen, Rahul? If the income which you see is relating to your business, you will do 15%. If the income is not relating to your business, you will do 22%, without allowing any kind of expenses. This is what the provisions are. Yes. Okay. This is what your computation of 115 BAA and BAB looks like. What is your computation of 115 BAA and BAB looks like? Can we go forward? Okay. If you have done with what is 115 BAA and BAB, I told you there are some conditions and all which you will not be eligible for. These are all the conditions. We will discuss when we do the chapters. Right now, I don't want to push it to you. You won't understand much. So let's leave it right now. We will go back to our 115 BAC. Before we do that, in your books, you will find a chart. Okay, it's a little twisted for me. In your books, you will find it in a horizontal format. You will find the chart where you can see the whole summary of 115 BAA and BAB comparative study. 115 BAA and BAB comparative study. Take a minute and go through the chart. If you do the chart properly, you may not have to read the other provisions. So you can read this chart itself and that will be sufficient. You can ignore all the first 5 pages. Okay. If you read the chart alone, you can ignore the first 5 pages. You will have to read the chart along with this exemptions and deductions. That would be enough for you. You won't have to read the theory part. Okay. Yes. So take your time at home and please go through this chart. Yes. Can we go to 115 BAC? Yes. Okay. Going back to 115 BAC, we have already done this in chapter number 2, but I'm just recapping it once again for you. It is 115 BAC coming and saying that it is available for individual HUF, AOP, BOI and AJP. I don't care what your age is. I don't care what your status is. Everything is fine for me. I will give you a tax rate of first 3 lakhs 0, next 3 lakhs 5, next 3 lakhs 10, next 3 lakhs 15, next 3 lakhs 20, ignoring 25, directly 30. If I find out that you are a poor person, you are eligible for rebate, but the rebate is for 7 lakhs with a rebate of 25,000. Since you are in new regime, you are also eligible for a special marginal rebate. If you are not a poor person, but you are a rich person, you are eligible for surcharges. 50 lakhs variko no surcharge, 50 lakhs to 1 crore, 10%, 1 crore to 2 crore, 15%, about 2 crores, 25%, and that's it. You don't have 37%. This 25% alone will not be applicable for that enhanced surcharge on capital gains and dividend income. So 4 items excluded for you: 112A, 112, 111A and dividend income. 4 items you cannot levy surcharge of 25. You will only levy surcharge of 15. If you are liable for surcharge, you are also eligible for marginal relief. Yes. Now I told you in this year was the amendment year, and in this year what has happened is 115 BAC has now become your default regime. Which means if you don't do anything, Rahul, you will be liable to tax under 115 BAC. If you remember, when I told BAA and BAB, I told you if you want to choose the new regime, you have to opt for it. In this it is ulta. Now they are coming and saying that you will normally be in this new regime. If you want to go back to Finance Act rate, you have to choose. If you want to go back to your Finance Act rates, you have to choose. This is what the provision says. So in this case, I will not come and tell you that for opting you have to file a form. I will say for opt out you have to file a form. Yes or no? Yes. Now, what is the provisions coming and saying? The provisions comes and says that, Rahul, generally you will be liable for 115 BAC, but you can opt out and go to normal. But Rahul, if you remember in 115 BAA and BAB, I came and said once you are in one regime, you cannot come out. Correct or not? You cannot come out. Yes or no? Yes. Here also the same logics. Here also the same logics with a small change. With a small change, they say, Rahul, tell me who are you? Tell me who are you? They ask me who are you? Okay, I can be two people. I can be two people. I can be a person into business or profession. I can be a person into business or profession, and I can be any other person. I can be any other person, meaning I can be a salaried person, I can be a retired person, all those things. I can be a salaried or retired person, all those things. Income tax comes and says that, Rahul, if you are a retired person or a salaried person, which means others category, if you are in others category, you can choose to come into this regime or go out of this regime every single year. Every single year. I will not put that condition to you. I will not put that condition to you. No restriction on you to come and say that you have to do 1 year now, you have to do forever. No conditions. You can choose to opt in, opt out whenever you want. You can choose to opt in and opt out whenever you want, which means in others category, they are coming and saying, normally 115 BAC can opt out every year. Normally 115 BSc can opt out every year by filing form 10 IC. Which means Rahul, I am currently having default regime. I decided by return timing that I want to opt for normal. Can I opt for normal? Yes. File a form, opt for normal. File a form and opt for normal. Rahul, this year I opted for normal. Next year, can I go for 115 BSc? Yes, you can go for 115 BSc. No restriction. Everything is fine. Rahul, next year I was in 115 BSc. Later on, can I go to normal regime? Yes, you can do that also. Okay. So as long as you are not doing business or profession, every year you can decide. You can either do normal or you can do special. You can do normal or you can do special only once in the year. Yes or no? This is what your provisions come and say. Now, Rahul, I am in others category, which means I have two people. One is either I am salary or I am unemployed or I am retired. Yes or no? Yes, I am either salaried or unemployed or retired. Now, Rahul, if I am salaried person, my taxes, will I pay or will employer deduct as TDS? Will I pay my own tax on salaries or will employer deduct TDS on that? Employer will deduct TDS on that. So if employer has to deduct TDS, I have to inform him what I will choose. Yes or no? Yes. So the provisions come and say, intimate your employer of the regime you want. At the start of the year. Intimate employer of the regime you want at the start of the year. Now, Rahul, I am working in a company. Company on the first day of the month comes and says me, Rahul, you are having now two options. You can either do normal or you can do special. Which one do you want? You went and said, sir, I want normal. I don't want 115 BSc. Company is now deducting taxes on normal rates. Suddenly in the next month of May, I decided, no, sir, I think special looks better. So you go back to your employer and come and say, sir, no, sir, actually I wanted special. Do one thing, you make it special now. Then in the month of June, you again go back to the employer, comes and says, no, sir, actually I think normal is only better. You come back to normal. Do you think employer will be happy or he'll be angry? Do you think employer will be okay to keep changing a regime every single month? No. They said, Rahul, intimate your employer of the regime you want at the start of the year. Employer will continue with this regime for the whole year. Employer will continue with this regime for the whole year. So we are coming and saying, Rahul, employer ko if you tell special, he will do special. Once you tell him, he will do the same thing for the whole year. He will do the same thing for the whole year. In the middle of the year, you cannot come and ask him to go back to normal. You cannot ask him to go back to normal, not permissible. Not permissible. Rahul, next year what will happen? Next year, same process. Again, 1st April, he'll come back to you and ask you what regime you want. You tell him normal, you tell him special. Basis that he will compute tax. Basis that he will compute tax. Now, Rahul, what happened is, I went and I told my employer by mistakenly normal. By mistakenly normal. When I was filing my return, I found out that special is giving me lower tax. When I was filing my return, I found out that special is giving me lower tax. Can I change my regime while filing return? Can I change my regime while filing return? Can I change my regime while filing return? Yes. You can change regime while filing return. Income tax is coming and saying, please understand what you told your employer is just a declaration. What you told your employer is just a declaration. At the end of the day, you are deciding whether you want which regime. At the end of the day, you are deciding whether you want which regime, which means you can decide to change your regime at the return filing stage. At the return filing stage, if you have any refund claimable, you claim the refund. If you have any refund claimable, claim the refund. Don't disturb the employer, that's all. Okay, so employer you tell once, he will follow that. If you tell the employer once, he will follow that. At the return filing stage, if you feel like you wanted something else, you can change. You can change. Yes, employee can change regime. Employee can change regime at return filing stage. Employee can do what? Employee can change regime at return filing stage. Employee can change regime at return filing stage, which means, Rahul, normally it will go for 115 BAC. If you want any other regime, you have to opt for that regime. If you want any other regime, you have to opt for that regime by filing a form. Inform your employer at the start of the year. Employer will continue this regime for the whole of the year, but you can change the regime at the end of the return filing. At the end of the return filing. Yes or no? Yes or no? Yes. Coming back to business. Now the new provisions come and say, normally it is 115 BAC. Normally it is 115 BAC. I told you, no, new provisions, they are coming and saying it is normally 115 BAC, which means normally default regime 115 BAC. Normally default regime 115 BAC. You can opt out. You can opt out by filing 10 IC. You can opt out by filing 10 IC, which means, Rahul, normally it is 115 BAC. Normally it is 115 BAC, but I feel like 115 BAC is not helping me. Maybe I can claim more deductions and all, and I want normal regime. They are saying, no problem, boss. No problem. You can file a form of 10 IC and you can claim the normal regime. But Rahul, I have come back to normal regime. Can I keep doing jumping again and again? Go to normal, then go to special, go to normal, then go to special. Business profession like confusion irkadu. Will there be a confusion? Will not be a confusion. There will be a confusion. They came and said, Rahul, can opt by filing 10 IC. What can you opt? Normal. You can opt normal by filing 10 IC. No. You have decided to go for normal. You will be asked to continue normal. Okay, so the moment you decide that you want to go back to normal, you will continue normal forever now. Rahul, one of the years I found out that no, Rahul, actually special looks better. Can I come back to special? Yes, you can come back to special. You can come back to special once. Now, listen to this very carefully. When we were doing 115 BAA and BAB, I told that you are normally under normal. You can come to special. The moment you decide to be in special, you will forever be in special. You cannot come back to normal. Yes or no? Yes. Here in 115 BSc, I am giving you a one-time window. In 115 BSc, I am giving you a one-time window where I am coming and saying, if you have gone back to normal, I am okay to bring you back to special. One time window I'll give you. If you want to come back to special, no problem. Once I will allow. If you have then decided to come back to special, you will forever stay in special. Once you decide to come back to special, you will forever stay in special. That is what the provisions come and say. Yes, what is the provisions coming and saying? I am normally in 115 BSc. I can come back to normal. If I decide to be normal, stay to normal. But if you come back to 115 BSc again, I will let you come back once. But the moment you decide to come back to 115 BSc, I will never let you go back again. You can never go back to normal again. Yes or no? Yes, this is what the provision is. Now, the question is, Rahul, what happened is, there is a person with business or profession. I am telling that, Rahul, business or profession, this condition is there. Where I am coming and saying you should do 115 BSc, or you can do normal. But if you do normal, forever normal. If you choose to go to special, it will again be forever special. Yes, Rahul, what has happened is, I worked in my company for 50 years. I worked in the business for 50 years. 51st year, I am now becoming retired. 51st year, I am now retired. For this last 50 years, I was only into 115 BSc. Now, 51st year, am I working or am I retired? I am retired. Is the business alive? Not alive. Business is not alive. Rahul, now, can I decide for normal? Yes. Can I go back to special? Yes. Can I do both every year, Rahul? Yes. Basically, what they're coming and saying is, this restriction which I'm putting on you, to go for normal or go for special forever is only until business or profession is alive. Which means if business or profession is discontinued, move to the right side. What do I mean by right side, Rahul? Which means you will come to the right side now. You will become in others category. Which means the moment you are in others category, you can choose to do normal and special every year. Yes or no? Yes. Take an example. Rahul, I am Mr. A. I am in assessment year 23-24. What am I in? Assessment year 23-24. Now, in assessment year 23-24, my default regime is, what is my default regime? My default regime is 115 BAC. Yes. So, I decided that I will stick to 115 BAC, no problem. Have you violated any condition? No. Which means you are eligible for 115 BSc. Yes. Now, I am in assessment year 24-25. I decided to continue with 115 BSc. Is there a problem? No, there is no problem. Therefore, 115 BSc continue. Rahul, I am in assessment year 25-26. I looked at my computation statement. It looks like, Rahul, normal is better. So, I decided I will go to normal. Can I simply go to normal? No, I need to file a form. So, I filed a form. And I've gone to normal. Okay till here? Yes. Now, I am in 26-27. I'm in 26, 27. Hey, if you have decided in 25, 26 that you want normal, in 26, 27 also it will continue to be normal. It will continue to be normal. Yes, because you have decided to come to normal, you have to stick to normal. You have to stick to normal. Yes or no? Yes or no? Yes. Now, in 27, 28. In 27, 28. You normally have to do normal. You normally have to do normal, but this year you decided, no, Rahul, I think normal is enough. Normal is enough. It is giving me more tax. It is giving me more tax. Let me go back to special. Let me go back to special. Can you go back to special, Rahul? Yes. You can go back to special. One time benefit given to you. One time benefit given to you. Rahul, now I am in special. I am in special 28 to 29. I have to choose only special. I have to choose only special. Then Rahul, I am in 29, 30. I am in 29, 30. Rahul, can I choose normal now? Can I choose normal now? Can I come and say that, Rahul, no, I think I want to go back to normal. Can I go back to normal? No, you can only be in 115 BSc. You can only be in 115 BSc. Why, Rahul? Why, Rahul? What is the issue? The issue is you have already utilized your benefit. You have already utilized your benefit here. You have already utilized your benefit here, and then you decided to come outside here. And then you decided to come outside here, which means one time window which was given to you, you have utilized your one time window. You have utilized your one time window. After that, no more benefits for you. After that, no more benefits for you. Rahul, 29, 30 is 115 BSc. 30, 31, Rahul. 30, 31, Rahul. It will continue to be 115 BSc. It will continue to be 115 BSc. Clear? Clear? Yes. Now, what happened is in 20, 30, 31, I shut down my business. I shut down my business. I am now a salary guy. I am now a salary guy. So, for 20, 31, 32, 20, 31, 32, I shut down my business. I am now a salary guy. I am shutdowning my business and now I am a salaried guy. Rahul, can I choose normal? Can I choose normal? Yes. Why, Rahul? Because now you are on the right side. Now you are on the right side, which means you need to file a form. You need to file a form. Rahul. 31 over 20, 32, 33, 32, 33. Can I choose 115 BSc, Rahul? Can I choose 115 BSc, Rahul? Yes, because you are in others category. Because you are in others category. Rahul, 20, 34, 35. Can I choose 115 normal, Rahul? Yes, because you are in others category. Next year also I want normal. Possible, not possible? Possible, no issues. Which means every year you can now make a decision. Every year you can now make a decision. The only condition is when you are making a decision of normal, you need to file a form. You need to file a form. Yes or no? Yes or no? Understand, this is only for my individuals. This is only for my individuals. It is not for my companies and all. Companies ka system vera mari irukku. Companies ka system vera mari irukku. Companies system la default is normal regime. Default is normal regime. You can choose to go to special, but if you choose to go to special, you will forever be in special. You will forever be in special. You will never come back to normal. In the window irukla, the blue color window which you see, that window is not there for you. That window is not there for you. Once opted in, always opted in. Once opted in, always opted in. There you will opt for special. There you will opt for special. Yes or no? Yes or no? Does this example make sense? Yes. Okay. See. Where the person has income from business or profession, he may opt out of section 115 BSc by filing a form 10 IEA. By filing a form 10 IEA on or before the due date of filing a return of income for which the option is sought to be availed. Once the option is exercised, he shall apply the same option for the subsequent year as well, and the person shall never be eligible to withdraw the same
only once in the subsequent years. He will be eligible to withdraw the same only once in the subsequent years. Once he has decided to withdraw this, he shall never be eligible to opt in for the normal provisions ever again. He shall never be eligible to opt in for the normal provisions ever again, unless and until he ceases to have an income from business or profession. Unless and until he ceases to have an income from business or profession, because the moment he has an income from business or profession, he can automatically go to second others. He can automatically go to second others. Then if you do not have a business or profession, they say you can opt out of 115 BAC by filing a form 10I EA along with the return of income to be furnished for the return for which you want this option. An employee which is intending to opt out of 115 BAC may intimate the same to his employer of such intention during the previous year, and the employer on receiving such intimation shall make the TDS in accordance with the provisions of the section. However, it has clarified that the intention made is solely for the purpose of computing TDS, and the employee may choose not to exercise the option while filing the return of income. At the return of income stage, you can change your decision. The option which is excised shall only apply to the assessment year for which it is availed, and hence there lies no restriction of withdrawal and opting in subsequent years, which means every year you can decide whether you want to come inside or you want to go outside. Every year you can decide to come inside or go outside. Yes or no? Yes or no? Yes, this is what your 115 BAC looks like. Okay, this is what your 115 BAC looks like. All these deductions and exemptions we will discuss when we do 115 subsequent chapters. Leaving on to cooperative society. Like I told you, cooperative society is same as company. So what we learned for company is the same copy paste for cooperative. Yes, see, no, it says special tax rates for resident cooperative societies. They are coming and saying if you are a resident cooperative society, same as 115 BAA, it is 115 BAD, which means the rate will become 22. Plus 10% surcharge plus 4% cess. Any special incomes will be taxable at special rates. Cooperative society shall then they have come, all the conditions are same as 115 BAA. All the conditions given are same as 115 BAA. Yes or no? Yes. Moving on to the next amendment for the current year. The amendment for the current year comes and says, if you are a resident cooperative society who is engaged in the business of manufacture, or generating electricity, you are eligible under 115 BAE. The only one difference is in BAB. You came and said you should start manufacture, you should incorporate your company on 1st October 2019. This provision has just come recently. Yes or no? So they said, boss, for this provision from the year in which it is there, which means it came in 1st April 2023. Yes or no? Yes. Now, Rahul, what are the benefits available to you? The benefits are same as 115 BAB. Nothing has changed. Form number alone will change. Here they are using the form 10 IFA. Rahul, will form number and all come in exam? No, they will not come in exam. You don't have to worry about it. All conditions are the same. The only one difference is they are coming and saying company, cooperative society incorporation date should be after 1st April. Which means munadi 1st April ko munadi in the only companies can claim 115 BAB. 1st April ka apro in the cooperatives can also claim 115 BAB. Yes or no? Yes. Any doubts? No. Take your amendment highlighter and highlight the whole 115 BAE. This is your new amendment for the current year. Highlight it quickly. Take your amendment highlighter and highlight the 115 BAE quickly. Let me know once you're done. Done? Okay. Yes. Great. This marks the end of your chapter number 3, which is your special tax rates. This marks the end of your chapter number 3, which is your special tax rates. Now, I do have questions for you. But I don't want to solve it. Because all these questions require you to know the other chapters. So I don't plan to solve it right now. What I'm planning is we will do the other chapters. In my book, you also have one more chapter called as comprehensive questions. You also have a chapter called as comprehensive questions, where basically we try to do a full-fledged compulsory question which you have in your exam, no? And the compulsory question we try to do in that. So when we do that question, that time we'll come back to this. So right now I don't want to solve the question. There is only one question which I solved for you, which is that marginal rebate question. Plus now I have given you additional questions for practice. 2 things, if you remember, that is enough for you right now. From tax rate perspective, this should suffice. Yes or no? Yes. Okay. So what we'll do is we will come back to this chapter once we are done with the other chapters. Once we have completed the whole other chapters, that time we'll come back to this. Right now, I don't want to do those chapters. Okay. Can we go to the next one? Okay. In interest of time, what I'm going to do is I'm going to do a very small chapter for you right now. I'm not going to waste too much time. We're going to do a very small chapter. Let's go back to our index and see what and all we have done. We have completed what is called as basics of income tax. We have also completed what is called as rates of taxes. We have now completed what is called as special tax regime. What I'm going to do is I'm going to quickly do the unexplained income. For today, and then we'll close for the day. Yes or no? Yes. I don't have to discuss much in the unexplained income. I'm just going to give you a hindsight of what we did in the inter-syllabus. Now, if you remember when we did chapter number 2, I came and told you that if you have any kind of unexplained income, what do you have? You have any kind of unexplained income, then that unexplained income will be liable for a tax rate of 78%. Yes or no? Yes. Now the question is, what do you mean by unexplained income? Income tax does not use this word called as illegal income. Okay, illegal and all is not a word in income tax. Because what is illegal and what may not be illegal may differ from person to person. So therefore they use this word called as unexplained. Where now in this chapter they are trying to tell me, what do you mean by unexplained cases? Now if you see the word itself, it means unexplained. Which means something which is not explained. Unexplained means something which is not explained. Yes or no? Yes. Now assessing officer is coming and saying that, Rahul, you have earned 1 crore rupees in the current year. You want 1 crore rupees in the current year. Tell me, where did you get this money from? What I will do, I will come and tell him that, sir, 1 crore rupees came from this person. Okay, so I'll say 1 crore rupees is coming from 1, 2, 3, 4 persons. This is what my bank statement is. You can check and verify. This is me giving an explanation to assessing officer. Yes or no? Income tax comes and says that, Rahul, if at all assessing officer is asking you something, please give him the explanation properly. If you don't give him proper explanation and assessing officer is unhappy with you, he will take that income and tax it off as unexplained income. Yes or no? Yes. So scenario, what is it? I am having 1 crore rupees. Assessing officer is telling me, tell me, Rahul, where did you get the 1 crore from? I said, sir, I will not tell you. Assessing officer will come and say, okay, then I have asked you for the source. You have not explained me the source. Income will become taxable at 78%. Yes or no? Yes. Next. What is happening? Rahul, I have earned 1 crore rupees. Assessing officer asked me to explain source. I told him, yes, sir. Actually, when I was walking on the road, no, there is one person whom I saw on the road. That person gave it to me in my hand and left off. This is the money from that person. Assessing officer is asking, tell me who the person is. Tell me who the person is. You are telling, sir, I don't know. It was someone on the road. It was someone on the road. I don't know who the person is. I don't know who the person is. Assessing officer is saying, no, no, I am not happy with you. I am not happy with you. I said, sir, I don't care. I don't care. You told me I should not explain the source. I should not explain the source. Have I explained the source? Have I explained the source? Yes, I have told you that it is from a person. Have I explained the source? Yes. Can you tax me right now? No. No. Therefore, income tax comes and says it is not enough that you should explain the source. It is not enough that you should explain the source. It is also important that the assessing officer should be satisfied with your explanation. Assessing officer should be satisfied with your explanation, which means in this chapter you can be caught twice. You can be caught twice. Case number 1, you can be caught when you don't even give the explanation. You don't even give the explanation. Scenario number 2, you gave explanation but assessing officer is not satisfied. Assessing officer is not satisfied. 2 scenarios, both the scenarios are called as unexplained income. Both the scenarios are called as unexplained income. In both these scenarios, assessing officer can ask you for 78% tax. Assessing officer can ask you for 78% tax. Yes or no? Yes. Yes. In this chapter, what we are going to do is we are going to look at the various scenarios where assessing officer can ask you for tax. We are going to look at various scenarios where assessing officer can ask you for tax. I want you to take a step back, forget direct tax, and let's go practical. Let's go practical. In practical world, how and all will a raid happen? In practical world, how and all will a raid happen? Do you know what is a raid? Yes, someone will come to your home, seize everything and go. And the Mari raid. Shivaji the boss la patripinga. Yes. So imagine the raid scenario. Imagine the raid scenario. What and all happens in the raid is what we are going to discuss. The moment a raid happens, the first thing which the assessing officer will come and do is, he'll come to your house. Yes or no? Yes. He'll come to your house. He will come and say, sir, you are under raid. You are under raid. Show me all your books. Show me all your books. Tell me where all the money is. Yes or no? Show me all the books and tell me where all the money is. So what happens is he opened up the house, he broke all the walls and everything, he found a lot of money, he found a lot of books and everything. He found a lot of money and he found a lot of books and everything. He saw your books. He saw your books. In the books it is said, money received from unknown person, 1 crore 50 lakhs. Money received from, money received from unknown person, 1 crore 50 lakhs. Assessing officer is coming and saying, dear Rahul, in your books, it says money received from unknown person, 1 crore 50 lakhs. Tell me where the source is. Tell me where the source is. Tell me where the source is. You will do 2 things. Either you will not explain the source. Either you will not explain the source, or you explain the source but assessing officer is not happy. Assessing officer is not happy. In which case, what will assessing officer come and say? He will say, dear sir, the 1 crore 50 which you are showing right now looks illegal to me. I will tax it at the rate of 78%. 78%. Scenario number 1, I saw a cash credit in your books and I am asking you for source. What is scenario number 1? Cash credit in your books asking for source. Cash credit in books asking for source. Yes or no? Read it with me. Read it with me. It says, where any sum is found credited in the books of the assessee and the assessee offers no explanation about the nature and source. The assessee is offering no explanation about the nature or source, or he is offering explanation but the explanation is not satisfactory. Yes. What is the scenario? The scenario is for any sum found credited in the books. Any sum found credited in the books. So someone is having a sum credited in the books, assessing officer is asking for explanation, you did not give explanation, or you gave explanation but it is not satisfactory. The sum credited will become income of the assessee, liable for 78%. Liable for 78%. Yes or no? Yes or no? This is the scenario number 1. This is the scenario number 1. Any doubts? Any doubts? No. Okay. Now, what has happened is, there is a person called A. There is a person called A. A actually opens up his balance sheet. A actually opens up his balance sheet, and here I found on the asset side there is something called cash received of 1 lakh. Cash received of 1 lakh. Assessing officer comes to the A and comes and says, dear A, there is some cash received of 1 lakh showing, show me where the source is. Show me where the source is. Assessing officer A comes and says, sir, I'll tell you the source. I'll tell you the source. Actually, what happened? No, my friend gave me loan. My friend gave me loan. If you check my liability side, you will find something called friend loan. You'll find something called as friend loan. You'll find something called as friend loan. Assessing officer says, who is this friend of yours person? Show me the friend. Show me the friend. Call him here. Call him here. You do not call him. You do not call him. You do not call him. Now, assessing officer is coming and saying, I am requesting you to call your friend. I want to see whether this is legal income or illegal income. I want to see whether it is legal income or illegal income. You are saying, no, sir, I can't call him. I can't call him. I'm sorry. I can't call him. I'm sorry. Why are you doing this? Because you know it is illegal. You know it is illegal. Yes or no? Yes. Now, what happened? Assessing officer decided. He said, Rahul, since you are not explaining me the source, I want to tax it for you. Since you are not explaining me the source, I want to tax it for you. You said, no, sir, you can't tax it for me. You can't tax it for me because this is not my source. This is not my source. For me, this is a loan. For me, this is a loan. If at all you want to tax this income, you can only tax it for the other person. Yes or no? Yes or no? I am saying that, Rahul, this is not my cash. This is my loan. This is not my cash. This is my loan. If it is my loan, I have to repay this back in the future. If I have to repay this back in the future, someone else owed money this is. If you want to tax this, please tax the other person. Please tax the other person. Go and ask him. Go and ask him. You said, I want to ask him, but you are not helping me itself. Because whose friend is he? Your friend or my friend? It is your friend. So I am asking you to call your friend so that I can tax it for him, but you are not ready to call him. What should I do? What should I do? Yes or no? Yes or no? So what happened is assessing officer ended up taxing it in my books. Assessing officer ended up taxing it in my books. I went to the court. I went to the court and I said the court, dear court, please understand, this is not my money. This is not my money. This is my loan. This is my loan. I have to repay back this loan to my friend in the future. I have to repay this money back to my friend in the future. When I repay back, that time you go catch him. That time you go catch him. At the end of the day, it is not my money. It is not my money. I do not want to justify the source. I do not want to justify the source. You have a problem, you go and ask him. You have a problem, you go and ask him. Court also agreed. Court also agreed. Court came and said, Rahul, you have taken this loan genuinely. You have taken this loan genuinely. If other person is having it illegally, why are you being blamed? Yes or no? You genuinely asked for a loan. You genuinely asked for a loan. The other person has earned it through illegal source. So why should you be taxed? So court came and said, it is not taxable in my hands. Court came and said, it is not taxable in my hands. Assessing officer won or assessing officer lost? Did assessing officer win or assessing officer lose? Assessing officer lost. Was he happy or sad? He was sad. Last year came an amendment. Last year came an amendment where they came and said, Rahul, going forward, if I ask you to explain the source of your loan, if I ask you to explain the source of your loan, it is your obligation to bring the other person. It is your obligation to bring the other person. If the other person is not able to explain the source, I will tax it for you also. I will tax it for you also. This is the amendment for last year. This is the amendment for last year. Read it with me, see if you understand. Read it with me and see if you understand. It says, where the sum is credited as a loan or a borrowing, explanation offered shall be deemed as unsatisfactory. Explanation offered shall be deemed as unsatisfactory unless the person in whose name the credit is recorded is offering the explanation about the nature and source. Unless the explanation is being offered by the other person who gave you the loan, and such explanation is found to be satisfactory for the AO. And such explanation is found to be satisfactory for the AO. So today, if I have to justify my loan, the other person should explain the source. If the other person does not explain the source properly, it will be treated as unexplained income for me also. It will be treated as unexplained income for me also. Yes or no? Do you have any doubts? No. Can we go forward? Can we go forward? Yes. Same example came for company. Same example came for company. What happened is there were certain people who earned money from illegal source. What happened is they took this money and they deposited in a company in the form of shares. They bought shares of a company. Now, for the company, this is what? For the company, this is the capital. Yes or no? For the company, this is a capital. So what happened is, assessing officer went to the company and said, dear company, I see that you have so much capital in your books. I see that you have so much capital in your books. Give me the list of every person who gave you money. Give me the list of every person who gave you the money, and also ask that person to tell where he got the money from. And also ask the other person to tell where he got the money from. Company came and said, dear sir, for me this is capital. For me this is capital. Why should I be bothered about where he got it from? Why should I be bothered about where he got it from? If you have a problem, go and ask shareholder. If you have a problem, go and ask shareholder. I don't want to take my headache. I don't want to take my headache. Matter went to the court. Court came and decided company is not taxable. Court came and decided company is not taxable. Income tax got amended. Now income tax says, where a closely held company obtains credit in the form of share application money, share capital, share premium, etc. The explanation offered shall be deemed to be unsatisfactory unless the resident person in whose name the credit is recorded also offers an explanation. Unless the resident person also offers an explanation, and such explanation is found to be satisfactory. Which means, now if you have taken a loan or borrowings also, you are taxable. If you have taken a application money also, you are taxable. The one word which I want you to focus on is, closely held company. What company? Closely held company. Now, what is the definition of closely held company? We will discuss when we do IFOS. In simple logic, closely held company is a private company. What company? Private company. Which means this provision is only applicable for private company. It is not applicable for public company. Why, Rahul, is this why this distinction? Understand, private company la shareholders will be known people, unknown people. In a private company, will shareholders be known people, unknown people? They will be known people, which means company owners generally will be the company shareholders also. Yes, which means the director will be one of the shareholders only. 99%, that is what the scenario will be. Yes or no? In which case, all these companies will know about their shareholder source. Anna, imagine a public company. Hey, when I give a public issue, do I know the other person? Am I related to the other person? No. Will I be ever knowing what source his money is from? No. Can assessing officer tax me for some unrelated person? No. Therefore, they put this provision only for closely held company. Because they feel closely held company la you will know. Yes or no? Yes. Next, they are coming and saying the whole provision of A and B, the loan and the application shall not be applicable in case the person in whose name the sum is credited is a venture capital fund or venture capital company registered with SEBI. Venture capital fund or venture capital company registered with SEBI. What is this venture capital fund and venture capital company? These are all foreign investors. What investors? Foreign investors. Income tax is coming and saying, boss, if the investor is a foreign person, it is very difficult for me to ask you the source. You may not even know who this person is. He is just an investor for you. If I come and put pressure on you to come and tell me his source, it will become a problem for me. At the same time, this venture capital fund will now feel distrust. He will not feel trustful enough to come to India. Yes or no? He will come and say, India is not trusting my money itself. Therefore, I am not very happy to be in India. Let me go out. Possible, not possible? Possible. Therefore, they came and said, Rahul, let's not risk it. Any venture capital fund or venture capital company, if they are going to deposit money into your account, that will not be taxable. It will not be treated as unexplained income. Yes or no? Yes, this was first scenario. I came to your house, I put a raid. I found some cash. Clear. Can we go forward? Yes. Next. I am looking at your balance sheet. First item I looked at is cash received. Second item I'm going a little top. I'm going into a little top. What happened is, I was actually looking at your house. I was looking at your house. Somewhere in the house, I found one big statue. Somewhere in the house, I found one big statue. When I looked at the statue, I found the statue is in gold. The statue is in gold. Yes. I went to the owner and I came and said, dear sir, gold statue. It easily looks about 1 crore. It easily looks about 1 crore. Show me where it is in the books. Show me where it is in the books. You saw the books, it is not there. You saw the books, it is not there. Why is it not there, Rahul? Why is it not there, Rahul? Because you bought that statue using illegal money. You bought the statue using illegal money. Yes or no? Yes or no? Yes. So what happened is, assessing officer came to you and he said, dear Rahul, I in your house found a 1 crore gold statue. I could not find the asset in your books. I could not find the asset in your books. Tell me where the source of this money is from. Tell me where the source of this money is from. Where did you get 1 crore rupees to buy a statue? Where did you get 1 crore rupees to buy a statue? You have two options. Either you don't explain the source, or you explain the source and he is not happy. And you explain the source, he is not happy. What will the assessing officer come and say? You bought the statue using illegal money. You bought the statue using illegal money. So whatever is the market value of the statue, that will become taxable in your hands as unexplained income. That will become taxable in your hands as unexplained income. Yes or no? Yes or no? Yes. You can come and ask me, Rahul, asset I bought 5 years back. Now you are taxing me. Yes, I will tax it. I will tax it. I will go 5 years back and I will tax it. I will go 5 years back and I will tax it. It says, where the assessee has made investments which are not recorded in the books of accounts. Where the assessee has made investments which are not recorded in the books of accounts, and he offers no explanation, or the explanation is not satisfactory, the value of the investments shall be income of the assessee in the year of investment. Rahul, which means if the asset is worth 10 years back, you will go 10 years back and you will do it. You will go 10 years back and you will do it. How will you find out, Rahul? You will ask the person. If he comes and says, no, I will not tell you which year it was bought, I will assume it is bought in the current year. Yes or no? Yes or no? Yes. Next is called as unexplained money. What is this unexplained money, Rahul? I was looking at your house. Suddenly on the wall, I saw something is sticking. I broke the wall. I found money coming down. I went to the owner and I said, there is so much money in your ceiling. There is no much money in the ceiling. Show me in the books. So you are not able to find the books because it is illegal. Assessing officer will ask you for the source of this money. You tell the source it is left. You don't tell the source it is unexplained income. You tell the source he is not happy, it is unexplained income. Yes or no? Yes. Read. It says, where the assessing officer is found to be the owner of any money, bullions, jewelries, or any other valuable articles, and the same is not recorded in the books of accounts. And he is not able to offer explanation, or the explanation offered is not satisfactory. The valuables will be deemed to be the income of the assessee in the year of acquisition. To invoke section 69A, the assessing officer has to prove that the assessee is the owner of the valuables. In Shivaji the boss you would have seen, what would happen is, I am the owner of the statue. But the statue is living in my servant's house. The statue is there in my servant house. Now the raid has happened on the servant. Can you directly come and tax the statue in the hands of servant? No. You have to prove. You have to tell the department that, sir, this statue was not of the servant but is actually of the politician. In which case it will be taxable in the hands of politician. It will not be taxable in the hands of servant. Yes or no? Yes. Next. I am saying partial disclosure of investment and money. What is happening, Rahul? Same example. I saw that when I opened your house, there is a gold statue. When I went to your house, I found one gold statue. I went and I found that the gold statue is worth 1 crore. How much is the gold statue worth? 1 crore. I told sure, show it in my books. Show it in the books. I showed him the books. I showed him the books. Books is coming and saying that balance sheet. In this balance sheet, there is something called as gold statue. The balance sheet, something called as gold statue. Number is showing 1 lakh. Number is showing 1 lakh. Yes. Now, statue is worth 1 crore. Statue is worth 1 crore. Yes or no? So, what happened is you as an assessing officer went to the Rahul and you said, dear Rahul, statue looks worth 1 crore. In your books, it is only 1 lakh. In your books, it is only 1 lakh. What happened to the balance? What happened to the balance? 99 lakhs. What happened to the balance? 99 lakhs. Tell me the source. Tell me the source. You try to tell him the source. He is not happy. Or you don't even tell him the source. What will he come and say? No problem, Rahul. 99 lakhs looks like illegal money. 99 lakhs looks like illegal money. 99 lakhs I will tax for you. 99 lakhs I will tax for you. Can you come and say, no, no, sir, actually I have recorded in assets. No, I am recorded in assets. Just that instead of 1 lakh I have recorded, instead of 1 crore I have recorded 1 lakh. Can you not tax it for me? No, he will still tax it for you. He will still tax it for you. Understand, in this scenario, he will only tax the 99 lakhs. He will not tax the 1 lakh because you have recorded something and gave him the source also. You have recorded something and gave him the source also. So that will not be taxable. That will not be taxable. Yes or no? Yes or no? Last item. Last item. We call it as unexplained expenditure. We call it as unexplained expenditure. What is happening? You are planning to have a marriage of your daughter. You are planning to have a marriage of your daughter. You go and you do a marriage. People are talking in the market saying you spent 4 crores in the marriage. You spent 4 crores in the marriage. Assessing officer called you to office one day. Assessing officer called you to office one day and came and said, dear Rahul, you have spent 4 crores for your daughter's marriage. You have spent 4 crores for your daughter's marriage. Tell me, where did you get the money from? Tell me, where did you get the money from? I said, dear sir, this chapter only talks about income. This chapter only talks about income. This chapter does not talk about expense. This chapter does not talk about expense. Even if this expense is made from illegal source, can you come and tax me? Is the question which I am asking. Is the question which I am asking. Assessing officer is saying yes. Assessing officer is saying yes. He says, Rahul, I am not looking at your expense. I am not looking at your expense. For you to make this expense, you would have got the income sometime back. Yes or no? For you to make this expense, you would have got this income sometime back. I am looking at that income now. I am looking at that income now. So tell me, where did you get the money from to make so much expense? Where did you get the money from to make so much expense? So which means now I am going and trying to justify my source of the expense. I am trying to justify my source of the expense. If I don't justify my source, or if I justify and he is not happy, what he will come and say? He will come and say, Rahul, these expenses were made from an illegal source. This expense was made from an illegal source, and therefore the expense will become an income for you. The expense will become an income for you. Yes or no? Yes or no? In which case, in my example, I spent 4 crores in my wedding. I spent 4 crores in the wedding. This 4 crores will become an income. This 4 crores will become an income. Yes or no? Yes or no? Yes, yes. Now question to you. What happened is, I went to the assessing officer. Assessing officer came and said, Rahul, you spent money on your wedding 4 crores. You spent money on your wedding 4 crores. I am going to tax it for you. I am going to tax it for you. I said, okay sir, no problem, tax it off. Okay, no problem, tax it off. But sir, the 4 crores is my expense also, no? You are going to tax it as an income. It is also an expense for me. Yes or no? Yes or no? Because I paid the money. Have I spent that 4 crores? Not spent the 4 crores. I have spent that 4 crores. I have spent that 4 crores. So I went to the assessing officer and came and said, sir, you add 4 crores as income for me. You also remove 4 crores as expense for me. My total income will become 0. My total income will become 0. Yes or no? Yes or no? Yes. So I went to my assessing officer and I came and said, sir, no problem, no problem. If you want to add it as my income, you add it as my income, but you also have to give me the expense. You also have to give me the expense. Is the assessee right or wrong? Can the assessee claim the expense? Can the assessee claim the expense? Huh?
No. No.
No, why? Why? If you remember chapter number 2, when I came and told you that you will be taxable at the rate of 78%, you will be taxable at the rate of 78%. I also came and told you that you will be taxable at 78% without allowing any deduction or expense. Which means, can I claim this 4 crores? No, I cannot claim this 4 crores. 4 crores directly will become fully taxable. 4 crores directly will become fully taxable. Yes or no? Yes or no? Yes. Look at the example. The example says Mr. A has incurred rent for business purposes of 60,000 rupees, which he has not even claimed as deduction. The assessing officer can still treat this income as 69C unexplained. If the assessee fails to explain the source. If assessee cannot contend that since it was incurred for the business, the same should be allowed as deduction because you cannot claim a deduction under section 115 BBE. Second scenario, if the assessee has claimed the same as expense, already, assessing officer would first treat the expense as an income and then disallow the expense also. So that you end up having only an income. How does this work, Rahul? Let's say, for example, you have a P&L. Yes, you have incurred an expense of 60,000. Assessing officer is asking you for the source of this expense. You did not explain the source. In the P&L, is this amount there? Not there. In the P&L, is this amount there? Not there. In the P&L, the amount is not there, which means assessing officer will directly treat unexplained income. How much? 60,000. He will directly treat unexplained income 60,000. Yes or no? Scenario number 2. I actually have claimed this rent of 60,000. Assessing officer is asking me for source. I said, sir, I don't have the source. He is coming and saying, Rahul, unexplained income 60,000. Unexplained income 60,000. I am saying no problem, sir, because left side 60,000 is also there. This two will become offset each other. Number will become 0. Hey, is assessee right or wrong? Assessee is wrong. This expense will be disallowed. So you will disallow the 60,000 rupees and then you will directly tax only unexplained income of 60,000. Which means whether you record it in your books or you don't record it in the books, I don't care. Your income will be 60,000. Yes or no? Yes. This is your chapter on unexplained income. The reason I am rushing so much in this chapter is because I don't want to read it from exam perspective. From exam perspective, you can simply solve it in a single go. In exam, you need to look for a word called as explanation. What do you need to look for? You need to look for the word of explanation. If you see in the exam somewhere it comes and says that the assessee was asked for an explanation or the assessee was asked for a source, in that case you check the question, has he explained the source or not explained the source? If he has explained the source, let it go. If he has not explained the source, you will simply come and say unexplained income. It doesn't matter whether it is an asset, it is an expense, it is an income, it is a money, it is whatever it is. It doesn't matter. From exam perspective, single line answer. If the assessing officer is not getting the explanation or the explanation given is not satisfactory, money is income. That's all. Okay. You don't have to read the divisions and all. In exam, whole chapter is simple 2 lines. For the whole chapter, simple 2 lines. For exam purposes, I want you to read only the first 2 lines. Where it says, where the assessing officer deducts cash credit, unexplained investments, unexplained expenditure, the source of which is not satisfactorily explained by the assessee, or it is not even explained, or it is not even explained. The AO shall treat such contingencies as unexplained income and tax the same accordingly. Accordingly means 78%. Accordingly means 78%. Yes or no? Yes or no? Yes. So from exam perspective, I don't want you to read this chapter. I only want you to read the first 3 lines. I only want you to read the first 3 lines. Is that clear, everyone? Yes, great. This marks the end of your unexplained income chapter also. Please only read the first 3 lines for your exam purposes. Look for the word called as explanation. Look for the word called as explanation. If you see the word called as explanation, you leave it off. If you see the word as not explained or not satisfied, you tax it off. You see the word not explained or not satisfied, you will tax it off. Clear, not clear? 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 Perfect. This marks the end of your unexplained income chapter. Any doubts? Can we go forward? Yes, perfect. Okay. I'm stopping the class for today because we're out of time. We are now in your basics, done with basics, rates of tax, special tax rates, and unexplained income In next class, what we'll do is I have some 2 questions in this chapter. I will look at these questions without even reading this chapter. We'll try to solve those questions. Moving after that to agriculture income, small topic, and then to the bigger chapters of our total income, starting with PGBP. Yes, everyone? Yes. Please prepare for the chapters and come. Since you are done with part number A, if I feel like you have done a good amount of sums, I will give you a test also. Maybe next week, next to next week, we will have a test just to see how much you have understood. Okay. So please practice your whole part A and come for your test. Clear? All right. Thank you, people. Have a good day.